So very good morning everybody. So we'll move on to motor car facility, the most important perquisite of the entire chapter. Believed to be the most complex perquisite. Actually it is not. So we'll set some rules. Keeping in mind those rules, then you can yourself tell me what should be the value of perquisite. So we move on to this last one, motor car facility. Motor car facility. See how employer can provide you motor car facility. There are two different approaches. Number one, if an employee is already owning the car, if employee is already owning the car, in that case employer can tell that you use your own car, I will provide you fuel cost, I will incur the running and maintenance cost, I will provide you driver also, but you use your own car. So employee is using his own car, but all other expenditure is incurred by employer. This is the first approach or manner in which car facility can be given to employee. Second possibility is employer is owning the car, employer is incurring all expenses and is providing car facility to employee. Which approach will be more beneficial to the employee, or which option will be more beneficial? Definitely the second one, because in that case car is owned by employer, all expenses are also incurred by employer, employee is just getting the advantage out of it. So keep in mind only one thing, whenever you derive any benefit, whenever employer is incurring some cost, you are deriving some benefit. And if employer is incurring some cost, you are deriving some benefit, that amount needs to be added to perquisite valuation. See, if you are, say for example, 9 o'clock it is a breakfast time, you are having breakfast at your own cost. So you are spending money out of your own pocket and you are having a breakfast. Is it a benefit for you? Definitely your body will have some food, so it will have energy. This is the benefit. But you are having breakfast with your own money as compared to you are having breakfast at the cost of your friend. Which one is more beneficial? Definitely when your friend incurs the expenditure and you only have the breakfast, that one is more beneficial. So whenever you get benefit from someone, we say that is perquisite. But when we talk in connection with the chapter of income from salary, whenever you receive any benefit from employer, then it is a perquisite. But if you don't receive any benefit from employer, you are incurring cost from your own pocket, in that case there is no benefit. So motor car facility, there are certain parameters to be taken into account for the purpose of valuation of perquisite. The first parameter for the purpose of valuation of perquisite in case of motor car facility is ownership of car. What is first parameter? First parameter is ownership of car. If car is owned by employee and he is using it, then there is no advantage. But if car is owned by employer and that car is used by employee, definitely there is a benefit. How to ascertain benefit? For that government says you look at the nature of car, is it owned by your employer or it is taken on lease by the employer? If it is owned by your employer, in that case you take 10% per annum of the actual cost, that should be taken as perquisite value. And if it is taken on lease by the employer, then whatever lease charges, hire charges, etc. employer is paying, that should be taken into account for the purpose of valuation of perquisite. So first parameter for valuation of motor car facility is ownership of car. There are two possibilities, car is owned by employer, car is owned by employee. If car is owned by employee, no benefit. If car is owned by employer, yes, there is a benefit. So then you quantify the benefit. If car is owned by employer and you are using it, it is 10% per annum of actual cost. If car is taken on hire by employer or car is taken on lease by employer, then you take lease charges or hire charges. So this is the first point or first parameter which is required to be taken into account for the purpose of valuation of motor car facility. Second point or second parameter is running and maintenance expense. See, I am not using the word repairs and maintenance expense. I am using the word running and maintenance expense. Running means fuel cost. Running means fuel cost. And maintenance means monthly, half yearly, whatever maintenance you incur. So, if running and maintenance cost of the car is met by the employee, then there is no benefit. But if the running and maintenance expenditure of the car is incurred by employer, then yes, there is benefit. Whenever there is benefit, add that amount to perquisite. So if running and maintenance expenditure is incurred by employer, you pick up that amount of expenditure, add to the perquisite valuation. Next point is, who is driving the car? There are two possibilities. Employee himself is driving the car. In that case, no cost is incurred. Another possibility is driver is appointed. So in that case, question is, who is paying the driver's salary? If employee is paying the driver's salary, he is not deriving any benefit from employer. But if employer is paying the driver's salary, definitely that benefit is derived. If employer is incurring driver's salary as a cost, you are getting the benefit. You are getting the free driver facility. So, if employer has paid the salary to the driver, then driver salary should also be taken into account for the purpose of valuation of perquisite. Have you understood these three parameters, 3 points? Number one is what? Ownership of car. Number two, who is incurring the running and maintenance expenditure? And number three, who is paying the driver salary? Actually, this driver's salary is nothing but part of expenditure only. It is part of expenditure. When we say running and maintenance expenditure, running cost will include the driver's salary as well as the fuel cost. But we identified separately. Now we move on to the last parameter, that is third parameter. Running and maintenance cost, driver salary should be taken in a combined manner. So that becomes the second parameter. Third parameter is for what purpose car is used. For what purpose car is used. Now here there are three possibilities. Possibility number one, if car is used 100% of the time for official purposes. If car is used 100% of the time for official purposes. In that case, do you believe that there is an advantage to you? No, because you are using the car only for official purpose. In that case, whatever expenditure is incurred should not be taken into account for the purpose of valuation of perquisite. Because you are not getting any personal advantage out of this facility. There is no personal benefit to you. Only the office is benefited. Only the employer is benefited. So when the car is given by employer to the employee and it is used 100% of the time for official purposes, there is no advantage at all. Number two possibility here is, car is used 100% of the time for personal purpose. Car is used 100% of the time for personal purpose. Definitely there is 100% advantage. There is 100% advantage. So in this case, whatever expenditure is incurred by employer, if the car is owned by employer, you take the depreciation cost. If it is taken on lease, you take the hire charges. If running and maintenance expenditure is incurred by employer, you take that into account. If driver salary is paid by employer, you take that also into account. So whenever the car is used 100% of the time for personal purpose, all this expenditure should be taken into account for the purpose of valuation of perquisite. Now we have third possibility. Part of the time car is used for official purposes and part of the time car is used for personal purposes. Then the extent to which car is used for official purpose, to that extent tax cannot be levied. Tax should not be levied because there is no personal advantage. and the extent to which car is used for personal purpose, to that extent something should become taxable. That we'll discuss in detail when we move on to that possibility. But I'm just telling you right now that if the car is used partly for official purpose, partly for personal purpose, then personal proportion should become taxable, and the extent to which the car is used for official purpose, that should not become taxable. Have you understood this till now? Have you understood the parameters or points to be taken into account for the purpose of valuation of perquisite? There are three parameters. Number one, ownership of car. Number two, running and maintenance expense. And number three, for what purpose the car is used. So here, one more point I'll be adding here. But before that, let's look at this. Ownership of car. If car is owned by employer, yes, there is a perquisite. If car is owned by employee, there is no perquisite. If car is owned by employer, what is the perquisite? 10% of actual cost, or if it is taken on higher charges. Second point, running and maintenance expense. If the running and maintenance expenditure is incurred by employer, yes, there is a benefit. You take that actual expenditure into account for the purpose of valuation. If driver's salary is paid by employer, take that into account. If running and maintenance expenditure is incurred by employee, then there is no perquisite. Third parameter is for what purpose the car is used. Possibility number one, car is used 100% of the time for official purpose. Then there is no benefit, no perquisite. Car is used for 100% for personal purpose. Then there is 100% benefit. All the expenditure which are incurred by employer should be taken into account for the purpose of valuation of perquisite. Third possibility, car is used partly for official purpose and partly for personal purpose. In that case, we say that the extent to which car is used for personal purpose, to that extent it should become taxable. To that extent it should become taxable. Is that very, very clear? Yes? Have you understood the points which are required to be taken into account for the purpose of valuation of perquisite? Yes, everyone? Yes, very good. So now what you should do now? I will be explaining you this motor car facility from this flowchart given on page number 65. On the screen, this flowchart may not be visible very clearly because the font size is too small. So what you can do, you can open page number 65 in your textbook in front of you. Keep that textbook in front of you, open that page number 65 instead of looking at the screen. Now, screen is just in front of you to understand that where I am on which point. Now, before we move on to understand this in detail, one more point I wanted to tell you. If you recollect, we are in which provision? We are discussing which section? We are discussing section 17 subsection 2 clause 3 versus section 17 subsection 2 clause 4. 17 to clause 3, perquisite provided by the employer to the specified employee. 17 to clause 4, obligation of employee met by employer. In that we are having a detailed discussion with respect to all the perquisite. We started with gas, electricity and water supply connection charges. Then we moved on to domestic servant facility. Then we discussed education facility. Then we discussed leave travel concession, medical facility. Now we are on motor car facility. Yes, we also discussed transport facility. Now we are on motor car facility. So here also we should think whether this perquisite will be covered in 17 to clause 3 or will it be covered in 17 to clause 4. If it is covered in 17 to clause 3, then for a specified employee it is taxable, but for a non-specified employee it is not taxable. If it is covered by 17 to clause 4, then it is obligation of employee met by employer. It is taxable in case of specified employee as well as non-specified employee. Do you recollect that understanding of 17 to clause 3 versus 17 to clause 4? Yes. So here we are writing, if employer is the owner of the car, If employer is the owner of the car, then in that case we say that it is the duty of employer to incur all the expenditure. He is incurring the expenditure, but employee is just getting the benefit out of it. In that case, it is taxable only in case of specified employee. Whereas on the other hand, if employee is the owner of the car, then we say that if an employee is the owner of the car, it is his duty to incur the expenditure. If employer is incurring expenditure or expenditure is incurred by employee and subsequently they are reimbursed by the employer, in that case we say that perquisite will be covered by 17(2) clause 4 and it will be taxable in case of specified as well as non-specified employee. In other words, it will be taxable in case of all employees. So keeping in mind all those things, we should now move on to discuss the entire perquisite valuation with respect to motor car facility. But before we actually move on to discuss, we'll try to make different permutation combination taking into account these three parameters. First parameter is ownership of car. Second parameter is who is incurring running and maintenance expenditure. And third parameter is for what purpose car is used. For what purpose car is used. We should take into account these three parameters and we should first of all make different possibilities, different permutation and combination. Once they are made, then we can comfortably move on to the valuation part. So first of all, I am making 12 different possibilities. I am making what? 12 different possibilities. Motor car facility, we are dividing in two parts. Number one, when the car is owned by employee. Left hand side is section 17 subsection 2 clause 4, when the car is owned by employee. Right hand side is 17(2) clause 3, when the car is owned by employer. Car is owned by employer, then we say it is covered by 17(2) clause 3. If car is owned by employee, then we say that it is covered by 17(2) clause 4. So first of all, based on who is owning the car, I am bifurcating this flowchart into two parts. Left hand side, car is owned by employee. Right hand side, car is owned by employer. What was our second parameter? Who is incurring the running and maintenance expenditure? So on the left hand side, when the car is owned by employee, here we are putting that, we are saying that there are two possibilities. When car is owned by employee, possibility number one, running and maintenance expenditure is incurred by employee, and second possibility is running and maintenance expenditure is incurred by employer. Now, just below running and maintenance expenditure, we should put usage of car. For what purpose the car is used. In that you know that there are three possibilities. Car is used for 100% time for official purpose, 100% time for personal purpose, and third possibility is partly official, partly personal purpose. So, just below this point number 1, we should actually put three possibilities. Possibility number 1, 2 and 3. Possibility number 1, 2 and 3. Or instead of that, let me write 1A, 1B, 1C. Then I will make you understand that 1A, 1B, 1C are one and the same. 1A, 1B, 1C, there are three possibilities. Which are those? Possibility 1A means car is used 100% of the time for official purpose. Possibility 1B, car is used 100% of the time for personal purpose. And possibility 1C, car is used 100% of the time for, car is used partly for official purpose and partly for personal purpose. Similarly, just below point number 2 also, we should do bifurcation in three parts. Car is used 100% of the time for official purpose, car is used 100% of the time for personal purpose, and car is used partly for official purpose, partly for personal purpose. Yes, have you understood? After, at the end, the last part of the flow chart, everything will be divided in three possibilities. 100% official purpose, 100% personal purpose, and partly official, partly personal purpose. So, If you look at this flow chart carefully, then on this side, I have bifurcated in three parts: 100% official purpose, 100% personal purpose, partly official, partly personal. 100% official means wholly official purpose. 100% personal means wholly personal purpose. And third part is partly official and partly personal purpose. Yes, have you understood the structure? Understanding the structure is more important. The moment you have understood the structure, valuation is very simple. Yes, okay. Now let's move on to the right hand side. Left hand side story is over. I move on to the right hand side. Right hand side also, I'll do the bifurcation in the same manner. But how different right hand side is as compared to the left hand side? What is the difference in the right hand side as compared to the left hand side? Yes, on the right hand side, car is owned by employer. On the right hand side, we say that car is owned by employer. So that also we are dividing in two parts. Number one, running and maintenance expenditure incurred by employee, and running and maintenance expenditure incurred by employer. So right hand side, first of all, we are taking into account second parameter. Second parameter is what? Who is incurring running and maintenance expenditure. Based on that, we are bifurcating the right hand side flow chart also in two parts. Number one, running and maintenance expenditure is incurred by employee, and number two, running and maintenance expenditure is incurred by employer. So left here I have written running and maintenance expenditure is incurred by employee, and here running and maintenance expenditure is incurred by employee. Now this should be further divided in not an issue, Rizwan, right hand side of this page, we say that car is owned by employer. Car is owned by employer. So right hand side now, based on the ownership of car, right hand side we have written car is owned by employer. That is the first parameter to be taken into account for the purpose of understanding the motor car facility. What is second parameter? Who is incurring the running and maintenance expenditure of the car? Who is incurring the running and maintenance expenditure of the car? Based on that right hand side, we are doing the bifurcation in two parts. Possibility number one, running and maintenance expenditure is incurred by employee, and possibility number two, running and maintenance expenditure is incurred by employer. Have you understood Rizwan? Yes or no? Okay. Now, once we have done the bifurcation based on who is incurring the running and maintenance expenditure, we have to do further bifurcation based on the usage of car. And you know that further bifurcation is in three parts. Part 1, car is used wholly for official purpose. Part 2, car is used wholly for personal purpose. And part 3, car is used partly for official purpose, partly for personal purpose. Similarly, when the expenditure is incurred by employer, when the running and maintenance expenditure is incurred by employer, here also three possibilities. Car is used wholly for official purpose, car is used wholly for personal purpose, and last one, car is used partly for official purpose and partly for personal purpose. So broadly, I can say that we can divide using these three parameters of ownership, who is incurring running and maintenance expenditure, and for what purpose car is used. Take into account these three parameters, we can make 12 different permutation combination. We can make 12 different permutation combination. Yes. So now out of those 12 different combinations, see, motor car facility now, why people are facing difficulties? Any of your friends, if they are facing difficulty in motor car facility, then the reason is they do not know in which order they should study. See, everything in income tax you cannot study from, you cannot go in ascending on the page 1, page 2, page 3, page 4. because there is something appearing on page number 4 which is connected to page number 45. If you read page number 4 along with page number 45, then you can connect those two concepts and have a better understanding. But all other subjects, other than direct and indirect tax law, all other subjects chapters are independent. You just go in ascending order of the page number. But here you may see that we are connecting this page with some other page. So you should know the flow of the understanding. Similar here, motor car facility, the flow in which I am discussing the class, if you follow that flow while referring this perquisite at home, you will not find any difficulty. But if you go in ascending order, see here we have made 12 different possibilities. Now if this entire flow chart, if you want to say that how many possibilities are there, how many permutation combinations are there, then we can say that there are 12 different permutation combinations. Now while reading, if you read combination number 1, 2, 3, 4, 5, 6 in this order, then you will have a lot of difficulties. So the point is, you should read in the order in which it is being taught in the class. So first of all, we'll focus on first three possibility, and then we say that in first three possibility, actually first three possibility, they are different only for the purpose of formality. In all of them, employee is not deriving any benefit, so then we'll combine first three possibility. If we combine first three possibility, the number of permutation combination would reduce from 12 to 10. And then we'll understand combination number 1, then we'll understand combination number 2, 4 and 8, then we'll understand 3, 6 and 9. In this order we will go. So the order is different. You have to write this order somewhere. I'll make you write this order somewhere, and while you study the motor car facility, you have to study in that particular order. If you study in that particular order, you will not have any difficulty at all. So here I move on to the extreme left hand side of this flow chart. Motor car is owned by employee, running and maintenance expenditure is incurred by employee. Here actually we can put three possibilities. Number 1, car is used wholly for official purpose, car is used wholly for personal purpose, and car is used partly for official and partly personal purpose. Three possibilities. Now listen to me very carefully. Listen to me very carefully. Here who is owning the car? Employee is owning the car. Employee is owning the car. So what is the advantage? There is no advantage. Next, who is incurring the running and maintenance expenditure? Employee is incurring the running and maintenance expenditure. So is there any advantage? No advantage. See, if you spend money, out of your own pocket, and if you enjoy your breakfast, the feeling of contentness is less. But if you have breakfast free of cost and your friend is paying the bill, then there is more satisfaction, high level of satisfaction. There is more contentness. Similarly, if you are spending your own money and you are getting some facility, there is no advantage. There is advantage only if your employer is spending and you are taking the benefit. So here, on the extreme left hand side, car is owned by employee. Expenses are also incurred by employee. In that case, if I say that car is used 100% of the time for official purpose, car is owned by employee, running and maintenance expenditure is incurred by employee, and car is used 100% of the time for official purpose. In that case, we can say that employee is full. He is spending every cost from his own pocket, and 100% of the time he is using his own car for official purpose. He is full only. So he is not having any advantage. In fact, he is having disadvantage. He is having disadvantage. If he is having disadvantage, then definitely there is no perquisite. If he is having disadvantage, definitely there is no perquisite. Yes? Are you understanding this? Yes, okay. Now second possibility. car is owned by employee, expenditure is incurred by employee, and car is used 100% of the time for personal purpose. In that case, it is as good as you are spending money out of your own pocket and you are having a breakfast. So what is the advantage? You are spending your own money and you are getting facility. So employer is not giving anything. In this case also there is no perquisite. Question of perquisite would arise only if you have got some advantage or benefit from the employer. So when the car is owned by employee, expenditure is incurred by employee, and car is used 100% of the time for personal purpose, there is no advantage. There is no advantage. Last possibility, when car is owned by employee, running and maintenance expenditure is also incurred by employee, and car is used partly for personal purpose, partly for official purpose. Then I can say that the extent to which car is used for official purpose. Now, to that extent, employee is full. He is not 100% full. He is partly full because car is owned by him, expenditure is incurred by him, and he is using that car for official purpose. So he is having part disadvantage. Part disadvantage. Are you understanding? So basically in these three possibilities, there is no benefit received by employee from the employer. So in this case, we are saying that there is no question of perquisite. There is no question of perquisite. So we are combining all these three possibilities and we are making it one, saying that when the car is owned by employee as well as the expenditure is incurred by employee, then there is no advantage at all. Irrespective of the usage of car, there is no advantage. Is that very clear? We are merging these three possibilities into one. So here we are saying when car is owned by employee, running and maintenance expenditure is incurred by employee, question of perquisite does not arise. Irrespective of whether the car is used 100% of the time for official purpose, 100% personal, partly official, partly personal, does not make any difference. Question of perquisite does not arise. Is that very, very clear? Have you understood the first combination? Yes or no? See, in income tax, I have already told you, there are only two possibilities. Either you can say that you have understood 100%, or you can say that you have not understood 100%. If you are having an opinion of it, or if you are saying that I have understood partly, then it is as good as you have not understood anything, because that part understanding is not going to get marks for you. So there are only two possibilities. Either you have understood 100% or you have not understood 100%. No marks for understanding any concept in a part manner. So you should understand very clearly in a 100% manner. So I am proceeding, presuming that you have understood the first three possibilities, and we have merged the first three possibilities into one. And we are saying that when the car is owned by employee, expenses are incurred by employee. In that case, there is no question of perquisite, because employee is not receiving any benefit from the employer. In fact, there is no advantage, there is disadvantage. There is disadvantage. Now, this is combination number one. So we have completed this combination number one. Now we are left with how many combinations? How many possibilities? 9. Point number 2 to 10. Point number 2 to 10. Yes. Shall we proceed? Now we'll move on to, see, I'll write here, bottom right hand side corner. Now I'll write the order in which I am teaching. Order of learning. This you can also write in your book. Order of learning. Number one, first of all, you should go for first combination. And then number two, you should go for combination number 2, 5 and 8. So now we'll go for which combination number? 2, 5 and 8. Can you tell me what is common in combination number 2, 5 and 8? Yes. What is common in combination number 2, 5 and 8? Yes. Look at the page number 265 in your textbook. Refer combination number 2, 5 and 8 and tell me what is common point. The common point is car is used 100% of the time for official purpose. Now you tell me, if car is used 100% of the time for official purpose, do you have any advantage? No advantage at all. Because car is used 100% of the time for official purpose, there is no personal advantage. So in that case, we say that in combination number 2, 5 and 8, in combination number 2, 5 and 8, there is no perquisite, there is no advantage. Therefore, taxable value of perquisite in case of combination number 2, combination number 5 and combination number 8 should be 0. Taxable value of perquisite in case of combination number 2, 5 and 8 should be 0. Yes, have you understood this very clearly? Now we will move on to understand combination number 3, 6 and 9. Yes, tell me what is common in 3, 6 and 9? What is common in 3, 6 and 9? Car is used 100% of the time for personal purpose. Car is used 100% of the time for personal purpose in these 3 possibility. So definitely there is 100% advantage. Definitely there is 100% advantage. Advantage only when employer is incurring the cost. If you are incurring cost for your own purpose, there is no advantage. 100% advantage, but yes, only when the employer is incurring the cost. So you keep in mind very simple and basic thing. You have to apply our general rule here. What is our general rule? Amount incurred by employer. Amount incurred by employer minus amount recovered from employee. Apply this general rule and you will get the valuation. So in this point number 3, 6 and 9, we will apply the general rule of amount incurred by employer minus amount recovered from employee and we get the amount of perquisite. First of all, let's move on to this combination number 3. Combination number 3, can you tell me car is owned by whom? Combination number 3, who is owning the car? Yes? Quickly. Employee is owning the car. If employee is owning the car, there is no advantage with respect to the first parameter, that is ownership. There is no advantage with respect to the first parameter, that is ownership. So we should not take into account the 10% of actual cost, higher charges, because employee is owning the car. This should be taken into account only when the car is owned by employer. So here in combination number 3, car is owned by employee. So due to that ownership first parameter, there is no advantage to employee. Now can you tell me who is incurring the running and maintenance expenditure of the car? Your employer is incurring the running and maintenance expenditure of the car. So don't you feel that should be taken into account? Definitely yes. That is the amount of expenditure incurred by employer. So I am writing number 1, running and maintenance expenditure. Running and maintenance expenditure. Second possibility, if employer has provided you driver and he is paying driver's salary, that driver's salary should also be taken into account. That's all. These 2 expenditure are incurred by employer. Write those two expenditure. Take the total. Take the total. From that, you deduct amount recovered from employee. From that, you deduct amount recovered from employee. Balance is taxable value of perquisite. Balance is taxable value of perquisite. Have you understood point number 3? Yes? Is that very clear? Okay. Let's move on to 6 and 9. Let's move on to 6 and 9. Can you tell me what is the difference between 6 and 9? The common point in 6 and 9 is what? Common point in 6 and 9 is in both cases car is owned by employer. What is uncommon point in 6 and 9? In 6, expenditure is incurred by employee. In 9, expenditure is incurred by employer. Now, if you compare 6 and 9, which one is more beneficial? Definitely 9. In 6, car is owned by employer, but expenditure is incurred by employee. Whereas in 9, car is owned by employer, expenditure is also incurred by employer. Employee is just enjoying the benefit. So definitely 9 is more beneficial as compared to 6. So the valuation of perquisite in case of 9th combination has to be more as compared to combination number 6. So let's first of all move on to this combination number 6. In combination number 6, car is owned by employer. So because of that ownership parameter, what should be taken into account? If the car is owned, 10% of actual cost. If car is taken on hire by the employer, then actual hire charges paid payable by employer. So first parameter, based on that first parameter, we are taking your depreciation at the rate of 10% of actual cost or hire charges paid payable. Now, driver salary should be taken as an independent parameter. Whenever driver salary is paid by employer, you take into account. If it is not paid by employer, you don't take into account. So every time I have written driver salary, I have written if any. If any means don't understand that driver will be working for free. Driver salary if any means driver salary incurred by employer if any. Driver salary incurred by employer if any. So you take the driver salary if it is incurred by employer. Then you take the depreciation or hire charges, whichever is applicable. You take the total. From that you deduct amount record from employee. You get the taxable value of perquisite. This is nothing but amount incurred by employer. From that we are deducting amount record from employee. That's all. Yes, have you understood point number 6? Now listen to me carefully. Listen to me carefully. In point number 3, car is owned by employee and expenses are incurred by employer. In point number 6, car is owned by employer but expenses are incurred by employee. The combination number 9 is the excellent combination giving more benefit to the employee. Here car is owned by employer as well as the expenditure is incurred by employer. So can I say combination number 9 is nothing but a totality or all the parameters taken into account from combination number 3 as well as 6. Mathematically also 3 plus 6 is 9. And here also, whatever benefit employee is deriving in combination number 3 and whatever benefit is deriving in combination number 9, all those benefits he is deriving in a cumulative manner in combination number 9. Yes or no? So, whatever you have written in combination number 3, whatever you have written in combination number 6, take into account both things and write in a combined manner, that's all. So see, point number 9, amount incurred by employer. In that we will write what? Running and maintenance expenditure, number 1. Number 2, driver salary if any. Number 3, depreciation at the rate of 10% of actual cost or higher charges paid payable. Then you take the total. From that you deduct amount record for employee. Balance is taxable value of perquisite. Have you understood this? Point 9? Yes or no? Ronak, that 900 you are talking about, that will come in combination number 4, 7 and 10, not in combination number 3, 6 and 9. Because in combination number 3, 6 and 9, na, car is used 100% for personal purpose. Na. So entire driver salary, if employer is paying, entire amount is incurred for personal purpose only. That 900 bifurcation will come only when the car is used partly for official, partly for personal. So we have to decide how much official, how much personal. For that, that 900 will be taken into account. Not here. Ronak, have you understood? Others should not think about this. He might have referred the motor car facility earlier. That is the reason he had got confused. So, it should be very much clear in our mind that combination number 3, 6 and 9 is nothing but very simple rule. Amount incurred by employer minus amount recorded for employee. That's all. It is nothing new that you are learning. So, till now, I believe that till now you have not applied your mind on this. Because you have not learned anything new. Now we will have to apply your mind. Slightly you have to apply your mind. Here, in combination of 1, 2, 5, 8, 3, 6, 9, it was less application of mind. Because whatever perquisites you have learned earlier, only those general rules are taken into account for the purpose of valuation. Now we need to apply the mind. Now we move on to the last situation and we will be discussing which combination number? 4, 7 and 10. 4, 7 and 10. Can you tell me what is common point in 4, 7 and 10? What is common in 4, 7 and 10? In all these combination number 4, 7 and 10, car is used partly for official purpose, partly for personal purpose. Car is used partly for official purpose and partly for personal purpose. See, 4, 7, 10. Car is used partly for official and partly for personal purpose. But if you think logically, let me write in smaller fonts. 4, 7 and 10. In all these cases, car is used partly for official purpose and partly for personal purpose. So, partly official and partly personal purpose. I am dividing this in two parts. Number 1, car is owned by employee. And number 2, car is owned by employer. I want to make you understand only one thing here. When the car is owned by employee, if I ask you a very simple question, if the car is owned by employee, then logically it will be used more for which purpose? Will it be used more for personal purpose or will it be used more for official purpose? Definitely it will be used more for personal purpose. See, government has not said anything. When we say partly official, partly personal, it can be 90% official, 10% personal. It can be 90% personal, 10% official, 50-50 official personal. It can be any combination. Government has not spoken about it. But we are applying our mind, we are applying our logic to understand what can be the more rational possibility. So we say that when the car is owned by employee, there are brighter chances that personal use will be more and official use will be less. On the other hand, when the car is owned by employer, logically we would say what? Personal use would be less and official use will be more. Is that very, very clear? Yes? Does it seem logical to you? Yes. Okay. Now let's proceed with combination number 4. Combination number 4. Before we actually move on to combination number 4, listen to me very carefully. See, in combination number 4, number 1, car is owned by employee. Number 2, running and maintenance expenditure is incurred by employer. And number 3, car is used partly for official purpose, partly for personal purpose. So definitely, in that partly official, partly personal, the official portion should not be taxed because there is no advantage. Only personal portion should be taxed because there is an advantage. Because there is an advantage. So here in combination number 4, in this handwritten part, we can say that left hand side, when the car is owned by employee, we are talking about combination number 4. And the right hand side, when the car is owned by employer, I am talking about combination number 7 and combination number 10. Now, one more parameter. Listen to me very carefully. See, everything is logical, nothing is illogical. Everything is logical. One more parameter or one more point I wanted to take note of. See, for example, do we have Manoj today in the class? Yes? Mr. Manoj, are you there? Yes or no? We don't have Manoj, we are missing him. Ishwar, what has happened to Manoj? Has he left CA or he has left income tax? I think I'll have to call him after completing today's session. Not feeling well. Okay. In that WhatsApp group, you send me his number. I am not in a position to identify. You send me his number. Anyway, let us proceed. Say for example, Ishwar is my neighbor. Ishwar is my neighbor. He has purchased a new car. So, when I was there in the building downstairs, he came inside the building in his car. So I asked him, Ishwar, you have bought new car? Says, yes sir, I bought just in the last week itself. Superb car, excellent, very smooth on road. You need not apply the effort at all. I can just say that it is super duper steering. You just touch the steering, it is like a video game. Smoothly you touch and it will take a turn. Excellent car with all the facilities at a very reasonable price. I told him that I should also buy. If you are saying that there are so many features in the car with lot of advantages, that too at a reasonable cost, I should also think of buying. He says, sir, if I tell you something about the car, then you will not have that feeling. It is just that I am telling you. But if you take a ride, if you take one ride, you will understand what this car is. So he said me, sir, if you want, you take my car for a ride. If you take even for one ride, you will realize what is the quality of the car, what are the features. Superb, excellent, you should not think about it. If you intend to purchase the car, you should purchase this one only. So just by his talk, I am now motivated to buy that car only. Sometimes I feel that Ishwar is a marketing manager of that company. So, but by mistake, Ishwar has used one sentence. Sir, if you want, you can take my car for a ride to understand what features are there in the car. So, next day early morning, before 6 o'clock, I went to Ishwar's house. I have rang the bell and that domestic servant has come out. To that domestic servant I said, see, your boss only yesterday told me, na, if you want the car, take it for a ride. So give me the key. So I took the key. I went for a ride. Then Ishwar got up in the morning. He took his bath. He got ready for going to the office. And now he is waiting for the car to arrive. The domestic servant says, sir came in the morning and he took the key. Yesterday too, you told him that you can take the car for a ride. So early morning he came. I did not expect him to come so early in the morning. He took the keys and he said me that he will come in 10-15 minutes. Now it is already 3 hours. So Ishwar was waiting for the car to come back, car to arrive back, but I did not come. So what Ishwar did now? Ishwar incurred an expenditure. He called up that Ola Uber and he went to office. Evening when he came back, till that time car has not arrived back. So Ishwar was now more worried about the car rather than me. Then unwillingly he had his dinner, he went to sleep and he got a dream saying that car met with an accident. Forget about that person, but car is met with an accident. The moment he got that dream, he got up from the bed and just outside the window he saw, oh, car is there. Car is there. So he realized that yes, sir has kept the car. But next day morning, when he woke up and when he saw, car is not there in the compound. So once again he went to the domestic servant and asked him, where is the car? He said, no, sir came late night and he gave the keys. Now early morning he took away. Because you told him a ride. So today also morning he came. If this happens with Ishwar for next 7 days, 10 days, what will be his feeling? Will he enjoy this treatment which I am giving to him? Definitely not. No, but I am using his car, but I am incurring petrol, diesel cost. Na? So what is the disadvantage to him? The disadvantage is his car life is getting reduced. His car life is getting reduced and he is not in a position to enjoy the car facility. I am enjoying the car facility without I owning the car. Without I owning the car, I am enjoying the car facility. Now, Ishwar's car was a Mercedes. Ishwar's car was Mercedes and my car is Maruti. M for Mercedes, M for Maruti. So, I have used Ishwar's car for 5 days. I have used Ishwar's car for 5 days. Now, what Ishwar is thinking now? Now, sir has used my car of 50 lakh rupees for 5 days. Na. His 5 lakh rupees car, na, I should use for 100 days. Then only I will be in a position to recover that benefit, which he took away forcibly. So, he has used my car for 5 days. Na. I am going to use his car for at least 100 days. He will do such kind of calculation. Will I do such kind of calculation? No, not at all. Why? Because I am deriving the benefit. I am deriving the benefit. So I am not going to do any kind of calculation. But definitely he is going to do such kind of calculation. So here I am trying to make you understand that in combination number 4, now, car is owned by employee. Car is owned by employee and employee's car for some time it is used for official purpose. Employee's car for some time is used for official purpose. So that employee would think like Ishwar only. My car is used for official purpose. Na? I should keep a record for how much time it is used for official purpose. He will do the calculation. Human mind is such that, human nature is such that automatically calculation will start saying that he has used my car for 1 day. Now I should use his car for at least 2 days. So, similarly here also, when the car is owned by an employee, but it is used for official purpose, his thinking would be like that my car is used for official purpose. I should maintain the record to what extent it is used for official purpose. So, here government has created 2 options. Here government has created 2 options. Option 1. If log book is maintained, If log book is maintained. Log book is maintained. This is first option. And option 2, if log book is not maintained. See, what do you mean by log book now? Generally, whenever those scientists will do some research, they use the logbook to record what raw material they have used. Or say for doing, for example, scientist is doing a chemical research, then he'll keep the record which chemical was put it into this container first, after how many minutes the second chemical was added, then we waited for how many minutes. So each and every event is recorded in that book. That book is called as logbook. Similarly, here also, government has given you option. Option 1, if you have maintained the logbook, if you have not maintained the logbook. Second option. If you have maintained the logbook means, in that logbook, there is a detail of each and every journey. For example, Ishwar gets up in the morning and he goes for a morning walk. So he is taking his car from his house to the joggers park. From his house to the joggers park, he is going in a car. He is taking walk there in the garden and he is coming back. So in the morning he went to the garden and came back. 4 kilometers. Car has ran for 4 kilometers. So in that logbook he'll write serial number 1, date. Car was used for jogging. 4 kilometers. Which purpose? Oh, personal purpose. Number 2. When Ishwar came back home, he said to his wife, quickly make tea for me. So his wife said that actually yesterday only tea powder is over. Tea powder and sugar we don't have. So we have only milk. So do one thing, you go to the market and get me tea powder and sugar. So once again Ishwar has taken out the car, he is going to market and coming back. He has purchased tea powder and sugar. Once again in the logbook he'll write, oh car, next journey was for purchasing tea powder and sugar. 2 kilometers plus 2 kilometers, 4 kilometers, and the purpose was personal purpose. Now Ishwar came back, his wife made a tea for him, and he is now going for a bath, and once he is out of that, he'll have his breakfast, and then he'll pack his bag and he'll go for office. But the moment he came out, wife said that, see, today it is Thursday. Today it is Thursday, so it is your turn to take all these children to school. Yesterday it was my turn, so today it is your turn. You should leave them to school. So all these children are ready. They have taken bath, they have dressed up, their bags are ready, they are ready because they are happy that father is going to drop us to school today. We'll have a chance to sit in that car. Every day they are going in a school bus. So today they will have a chance to sit in a car. So Ishwar is going to his children's school to drop them. 5 kilometers going and 5 kilometers coming back. 10 kilometers. Which purpose? Personal purpose. So in that logbook he'll write, dropping children to the school, 10 kilometers, personal purpose. Now while coming back, he has called up his wife saying that I am getting too late. I will not come upstairs. You tie my bag, office bag, you tie in a rope and you drop downstairs. So Ishwar has got his bag. Now he is going to office. From residence to office, and office to residence, this traveling is generally considered as personal purpose. But for the purpose of motor car facility, only for the purpose of motor car facility, traveling from office to residence to office, this is considered as official purpose. Why, Why it is considered as official purpose, Because car facility will be given only to such an employee who will be having always less time and more work. Whenever car facility is provided to an employee, company will always ensure that he is burdened with a lot of work, so that car will be a second office for him. The moment he enters the car, he will start working. Driver will drive the car and in the back seat, he will sit and work. So car will act as a second office for the employee. Only for such an employee, car facility will be provided. That is the reason traveling from residence to office and office to residence is considered as official purposes for the motor car facility. So Ishwar will write going to office and coming back 10 plus 10, 20 kilometers. Which purpose? Official purpose. Now Ishwar is going to meet the client. From his office, he is going to meet the client. 15 plus 15, say for example 30 kilometers. So he will record 30 kilometers for meeting the client. Which purpose? Official purpose. So this is the manner in which the logbook will be maintained. So in logbook, there will be a detail of each and every journey performed. What is the number of kilometers? So at the end of the year, he can take up the total of the total number of kilometers. Whatever car is used for how many kilometers, that total kilometers he'll be having. Out of that total kilometers, he'll also be having the details as to car is used for official purpose for how many kilometers and car is used for personal purpose for how many kilometers. Now, based on that number of kilometers, he can definitely bifurcate the cost now. Say for example, throughout the year, the cost, driver salary, running and maintenance expenditure incurred by employer total is say 6 lakh rupees. And throughout the year, car is used. I am discussing about which option. Na? Listen to me carefully. Are you understanding na? What I am trying to explain you? We are in which point? We are in combination number 4. I am trying to explain you logbook. In that logbook right now we are in option 1. If logbook is maintained, yes or no? Do you know now we are moving in which direction? So we are in combination number 4. Here we have option 1. Option 1. Combination number 4. Option 1 means logbook is maintained. Logbook is maintained. Now say for example, car has been used for 30,000 kilometers. Throughout the year, car has been used for 30,000 kilometers. Now referring to logbook, he can easily bifurcate now. Out of 30,000 kilometers, how many kilometers used for personal purpose? How many kilometers used for official purpose? This bifurcation is very easily possible because he has maintained the record of each and every journey. So in that case, now say for example, for 25,000 kilometers, car was used for personal purpose, and for 5,000 kilometers, car was used for official purpose. And let me tell you, employer had incurred Rizwan, wait for some time, yeah. Don't create confusion. Wait for some time. First of all, let people understand the normal things. Then you get into that complicated situation. Now say for example, amount incurred by employer throughout the year is 6 lakhs. 6 lakhs is amount incurred by employer as driver salary plus running and maintenance expenditure. Now you bifurcate this 6 lakhs in 2 parts. You bifurcate this 6 lakhs also in 2 parts. Based on what? Based on this number of kilometers ratio na? Number of kilometers ratio. You use this ratio and bifurcate the expenditure in 2 parts. To what extent it is used for? To what extent expenditure is incurred for personal purpose? To what extent expenditure is incurred for official purpose? So can you tell me, if you have used car for 30,000 kilometers and the cost is 6 lakh rupees, per kilometer what is the cost? Per kilometer it is 20 rupees, and 25,000 kilometers car is used for personal purpose. So 25,000 kilometers into 20 rupees, this will give you 5 lakhs. This will give you 5 lakhs, and this official purpose is 1 lakh. Correct? Now official purpose is not taxable. Official purpose is not taxable. Personal purpose is taxable. Now you apply the general rule. What is general rule? Amount incurred by employer minus amount recorded from employee. So what is the expenditure incurred by employer? Amount incurred by employer 5 lakhs. From that you deduct. If any amount is recovered from employee, from this 5 lakh you deduct. The balance amount is nothing but taxable value of perquisite. Have you understood this very clearly? Yes or no? Yes. So this was which combination? Combination number 4, option number 1. Logbook is maintained. Now we are moving on to option number 2. Combination number 4. See, this is taking a lot of time, I know. But the point is, once I explain you this entire perquisite and you also participate in this, you will understand in a very clear manner and you will not have difficulties in future. So we are in combination number 4, option 2. What is that? Logbook is not maintained. Logbook is not maintained means you do not have any record with respect to car is used for, to what extent car is used for official purpose, to what extent car is used for personal purpose, what is the total number of kilometers. You do not know anything. You do not know anything. In that case, first of all you take what is amount incurred by employer. First of all you take what is amount incurred by employer. Amount incurred by employer can be number 1, running and maintenance expenditure. Running and maintenance expenditure can be the first point. Second point can be driver salary, if any. If employer has paid the driver salary, take that into account. So first of all you take running and maintenance expenditure. You also take driver salary. Then you take the total of both. Now you tell me, this is total expenditure. This total expenditure is incurred for which purpose? Official purpose or personal purpose or both purpose? Yes? It is incurred for both purpose. Very good. Now, it is incurred for both purpose. Out of both, what is not taxable? Out of both purpose, official and personal, what is not taxable? Official purpose is not taxable. So, I will deduct expenditure incurred for official purpose. I will deduct expenditure incurred for official purpose. But I do not know to what extent car is used for official purpose. But I certainly know that this car is owned by employee, so most of the time it will be used for personal purpose only. Very less time it will be used for official purpose. Very less time it will be used for official purpose. So in this case, official purpose usage will be very less. Official purpose usage will be very less. But we do not know how much. We do not know how much. Therefore, government says, do one thing. Whatever we are asking you, whatever amounts we are giving, you consider that amount to be incurred for official purpose. If the car is up to 1.6 cubic capacity, see 1.6 cc means 1600 cubic capacity. Maruti 800 is 800 cubic capacity. Bikes are 125 cc, 150 cc. Similarly, cars are also into cubic capacity. Engine capacity is Maruti 800 is 800 cubic capacity. So small cars, medium cars will be within the range of 1600 cc. Mercedes, BMW, these premium cars would be anywhere beyond 1600 cubic capacity. So government says if the car is small car or medium car, that is it is up to 1600 cubic capacity, then you consider that amount of 1800 per month is incurred for official purpose. Amount of 1800 per month is incurred for official purpose and you deduct that official purpose. What if the car cubic capacity is more than 1.6 cc? If the car cubic capacity is more than 1.6 cc, then what? Then you consider that 2,400 is the cost incurred for official purpose. 2,400 per month is the cost incurred for official purpose. You deduct the official purpose. Driver salary. If driver salary is paid by employer, then the driver salary is also partly for official, partly for personal. Na? But out of total driver salary, how much is official, how much is personal, I do not know. Entire driver salary is taken into that amount incurred by employer. Now, out of how much it is, out of the total driver salary, how much is official purpose, I do not know. But government says very less time it is used for official purpose, na this car. So, take driver salary is 900 per month. See, don't think that where you will get the driver at 900 per month. No, who said you that driver salary is 900? I am telling you the driver salary might be 15,000. So that 15,000 entirely is taken into account in that amount incurred by employer. Out of 15,000, 900 is driver salary for official purpose, remaining 14,100 automatically that is driver salary for personal purpose. So that amount incurred by employer is incurred partly for official, partly for personal. It is incurred for both purposes. From that you know that official purpose is not taxable. So we are deducting official purpose, but you do not know the extent of official use, but you know that official use is very less. So government has prescribed the amounts and you have to mug up these amounts. Up to 1.6 cc, 1,800 per month. Above 1.6 cc, 2,400 per month. Driver salary 900 per month. You deduct these amounts. The moment you deduct this amount, the amount which is arrived is for which purpose? From the total, if you deduct official purpose, balance is what? Balance is personal purpose. From that, you deduct what? Amount recovered from employee. From that you deduct amount recovered from employee. That's all. The moment you deduct amount recovered from employee, balance is nothing but your taxable value of perquisite. So in this combination number 4, second option, we have applied that same formula, amount incurred by employer minus amount recovered from employee. There is nothing new. We have taken total amount incurred by employer. From that we have deducted official purpose, prescribed amounts. So balance is personal purpose. From that we have deducted amount recovered from employee. Balance is taxable value of perquisite. So everywhere we are applying the same formula. Amount incurred by employer minus amount recovered from employee. That's all. Yes, have you understood this very clearly? We have completed the fourth combination. Now I move on to combination number 7 and 10. Listen to me carefully. Can you tell me what is common thing in combination number 7 and 10? Yes? What is common in combination number 7 and 10? In both cases, car is owned by employer. This is common point. What is another common point? In both cases, car is used partly for official, partly for personal purpose. What is uncommon point? In combination number 7, expenditure, running and maintenance expenditure is incurred by employee. Combination number 10, running and maintenance expenditure is incurred by employer. Now, can you tell me out of 7 and 10, which one is more beneficial to employee? Yes? Out of combination number 7 and 10, which one is more beneficial? Definitely 10 is more beneficial. Because in 10, car is owned by employer, expenditure is also incurred by employer, employee is just enjoying the facility. So in combination number 10, perquisite value should be more as compared to combination number 7. In combination number 7, perquisite value should be less. That might be very much certain in your mind. Now, keeping in mind these points, let's move on to this combination number 7 and 10 and refer this from notes. In combination number 10, first of all, I move on to this combination number 10. In combination number 10, you know that car is used partly for official purpose, partly for personal purpose. But can you tell me, it is more official or more personal? In combination number 10, car is used partly for official, partly for personal. But out of the total, is more official or more personal? Which purpose is used more? Definitely official is more because car is owned by employer. So, official purpose usage is more. Personal purpose usage is very less. Personal purpose usage is very less. Ronak, why in combination number 10 na procured valuation is more? Because in combination number 10, car is owned by employer, expenditure is also incurred by employer. So you are getting dual benefit. Whereas in combination number 7, car is owned by employer but expenditure is incurred by employee. So here you are having only single benefit. That is the reason procured value is more in combination number 10 as compared to combination number 7. So it has to be more in combination number 10. See, there are two things. Where the procured valuation should be more and where the procured valuation should be less. In combination number 7, procured valuation should be less. In combination number 10, procured valuation should be more. Correct? Now I am talking about the usage. I am talking about the usage. In combination number 7 as well as 10. In combination number 7 as well as 10. In both the cases, car will be used more for official purpose, less for personal purpose. This is also a common point for combination number 7 and 10. Because in both point now, both 7 and 10, car is owned by employer. So it is implied that it will be used more for official, less for personal. So whatever I am writing in this point, but whatever I have written in this point number 10, official purpose more, personal purpose less, that is equally applicable to point number 7 also. So here also I am writing official purpose, more usage, personal purpose, less usage. But still, if you compare point number 7 and 10, 10 is more beneficial because there the car is owned by employer, expenditure is also incurred by employer. I am just as an employee, I am just taking the advantage. In combination number 7, car is owned by employer, but expenditure is incurred by employee, so less advantage. So, we are first focusing on combination number 10, but you know that combination number 10 benefit is more, so procured valuation should be more. In combination number 7, benefit is less, therefore procured valuation should be less. So let's move on to 10. It says most of the time car is used for official purpose. Very less time car is used for personal purpose. But what do you mean by very less? What do you mean by very less? What do you mean by very less? I do not know what is very less. So government has defined very less means what? Very less means what? In this combination number 4 2 na, combination number 4 option 2, car was used more for personal, very less for official. But what was very less? Government had defined 1800, 2400, 900. So whatever is taken as official purpose in combination number 4 option 2, that same amounts are taken as personal purpose in combination number 10. Because in combination number 10, car is used for very less time for personal purpose. So here same government has written up to 1.6 cc, 1800 per month, above 1.6 cc, 2400 per month, driver salary 900 per month. So whatever amounts are taken as official purpose in combination number 4 option 2, same amounts are taken here as incurred for personal purpose, because in combination number 4 official purpose was very less, in combination number 10 personal purpose is very less. Very less is defined to be 1800, 2400, 900. So you take up the total, that is nothing but taxable value of perquisite. Taxable value of perquisite. Now very important point to be noted. In combination number 10, you have to ignore depreciation. You have to ignore depreciation, you have to ignore amount recovered from employee, and you have to ignore amount incurred by employer. Generally, we take the perquisite as amount incurred by employer minus amount incurred for employee. That is most logical thinking. But here we are not taking into account amount incurred by employer. We are not taking into account amount recorded for employee. Therefore, you have to remember this. You tend to forget this. An examiner will ask only this. So this combination number 7 and combination number 10 na, it is prescribed amounts, less of logic to be applied. Therefore, you will not remember. So, you have to revise combination number 7 and 10 day before examination. Examiner is going to ask you, mark my words. Examiner will ask you question on combination number 10. And you will try to apply your logic and you will give the wrong answer. Because your logic is not required to be applied. Amount incurred by employer, amount recorded for employee, those things are not taken into account. Therefore, you mark this point number 10 is very, very important. If you don't revise day before examination, you tend to forget this. And in the examination, you go and apply your logic. And if you apply your logic, you will get the wrong answer. Yes, have you understood this combination number 10 very clearly? Yes or no? Now let's move on to last one, that is combination number 7. You know that as compared to combination number 10, there is less benefit in combination number 7. As compared to combination number 10, there is less benefit in combination number 7 na. So perquisite valuation should be less na in combination number 7. So here government has prescribed comparatively lower amounts. Same parameters, but the amounts are lower. Up to 1.6 cc, there it was 1800, here it is 600 per month. Above 1.6 cc, there it was 2400, here it is 900 per month. Driver's salary is same everywhere. You take the total, that is taxable value of perquisite. Depreciation you have to ignore. Amount recovered from employee you have to ignore. One more thing you have to ignore. What is that? Amount incurred by employer. You have to ignore amount incurred by employer. Yes, have you understood this very clearly? So in combination number 7, perquisite valuation is less as compared to 10. Mark this 7 also as very important because you tend to forget these amounts and you tend to apply your logic in the examination, thereby you get the wrong answer. So out of 10 combinations, 8 are logical, 7 and 10 are not logical, they are prescribed amounts. So you tend to forget 7 and 10. An examiner would ask you either 7 and 10. Out of 2 also, if I want to tell you very precisely, he is going to ask you 10th combination only, mark my words. It will be 10th combination only. And most of the students will apply the logic and give the answer based on amount incurred by employer minus amount recorded for employee, and they'll get the wrong answer. So with this, we have completed motor car facility. Here I am going to just add one point now. I want to just add one point. The valuation is over. Now I want to just add one point here. Listen to me very carefully. If employer has provided you 2 cars, forget about one. Employer has provided you 2 cars. In that case, you cannot claim that both the cars are used partly for official purpose and partly for personal purpose. Government says if employer has provided you 2 cars, it is mandatory for you to consider only one car as used partly for official and partly for personal purpose. The second one is 100% personal purpose only. Second one is 100% personal purpose only. Similarly, instead of 2, if employer has provided you say 3 cars, employer has provided you 3 cars, then out of 3, only one will be considered to be partly official, partly personal. Remaining 2 will be considered 100% personal. Remaining 2 cars will be considered to be used 100% for personal purpose. So with this last statement, we have completed the motor car facility, and our income from salary chapter is over. At the beginning of the chapter, I told you that this chapter will become a favorite chapter for all those who have the habit of mugging up the things. So at the end of the chapter, you might have realized there are different rules, and right now, if you are feeling that how I will remember this, I will have to read at least 4 times, 5 times, then only I will remember. If that is your feeling, believe me, you are on the right track. But if you are feeling that no, it is simple, I'll remember in even if I read it once, I'll remember, then you are on a wrong track. Accordingly, you will make a wrong plan and you will get the wrong results. You will have to read it 4 or 5 times. Be mentally prepared. Before reading 4 or 5 times, you will not remember the things. You will understand everything. You have to read it 4 or 5 times. Be mentally prepared for this. Whether it is GST, whether it is income tax, whether it is enterprise information system, these subjects you will understand. But remembering is a challenge. You have to read it 4 or 5 times. Dixit says, sir, profit in lieu of salary is not discussed. Dixit, can you tell me the page number? Actually, it is discussed. I want to just discuss 2 points there. Profit in lieu of salary, actually it is discussed. Can you tell me the page number of the textbook? 51. See this. Profit in lieu of salary. Profit in lieu of salary. Let us refer to this very quickly. There are small points. I will explain you in one example. But profit in lieu of salary generally would mean capital receipt. Profit in lieu of salary would generally mean what? Capital receipt. So in the chapter of income from salary, revenue receipts are taxable, capital receipts are also taxable. All those capital receipts which are taxable, they are taken into section 17 subsection 3 and they are termed as profits in lieu of salary. Out of the 6 points appearing here, point number 3 is already over. Point number 3 is already over. Look at this. Section 10 clause 10 gratuity. Section 10 clause 13A house rent allowance. Section 10 clause 10A commuted pension. Section 10 clause 10B retrenchment compensation. Section 10 clause 13 superannuation fund. Section 10 clause 11 public provident fund, statutory provident fund. Section 10 clause 12 recognized provident fund. All these sections are over. I want to just make you understand one point. For that, for making you understand this point number 3, I am asking you a very simple question. You just read this sentence. Read this sentence and tell me what they are trying to say. Any amount due to or received by an SSE from his employer, former employer, except the following. They have used the word except the following. Except the following. What is the meaning of this word except the following? What they are trying to tell you? Are they trying to tell you anything other than point number A to G is taxable? So anything which doesn't fall into the list of point number A to G will become taxable. Is that the meaning you would interpret? Yes? Are you understanding? So, listen to me carefully. Dikshit, if you take the meaning of this word except the following, if you take the meaning of these words as other than these items, then that interpretation is incorrect. Then that interpretation is incorrect. What is the correct interpretation? For example, you have received a gratuity of 15 lakh rupees. You have received a gratuity from your employer at the time of retirement, 15 lakh rupees. Now you will calculate the exemption in section 10 clause 10, amount number 1, amount number 2, amount number 3, whichever is lower you will select, and that will become the amount of exemption. Now say for example, out of 15 lakh, 12 lakhs is exempt. Out of 15 lakh, 12 lakhs is exempt in section 10 clause 10. Remaining 3 lakh is taxable. Remaining 3 lakh is taxable. That remaining 3 lakhs is taxable here. So other than following means other than the portion which is exempt in following sections. So out of total gratuity which you have received, say 15 lakh rupees, out of that 12,000 is exempt. So remaining 3 is taxable. That remaining 3 is covered by point number 3. So when we use the word except the following, we don't mean to say otherwise than following points. We mean to say this points only. This points only, but only the taxable portion of that. Only the taxable portion of that. Have you all clearly understood what point number 3 is trying to say? Yes, shall I proceed? Now, point number 5. Point number 5. Keyman insurance policy. Point number 5 is talking about Keyman insurance policy. See, Keyman insurance policy, we have 4 sections. 4 sections relating to Keyman insurance policy. I have not discussed any one with you. I have not discussed. I will be discussing this in the chapter of IFRS. I am just giving you that there are multiple sections with respect to Keyman insurance policy. In the chapter of income from salary, we have section 17.3. In the chapter of income from salary, we have section 17, subsection 3, which is talking about Keyman insurance policy. In the chapter of profits and gains of business profession, PGP, we have section 28 talking about Keyman insurance policy. If you refer to section 28, there was one point relating to Keyman insurance policy. I have not explained to that point. I have skipped that point. In the chapter of income from other sources, we have section 56, subsection 2. That is also talking about Keyman insurance policy. One of the clause of section 56, subsection 2 is talking about Keyman insurance policy. And we also have section 10, clause 10D. So there are 4 sections connected to Keyman insurance policy. We will discuss all these 4 sections at the same time, so that you will have an excellent understanding with respect to entire concept of Keyman insurance policy. And that will be discussing in the chapter of income from salary. So for the time being, I am taking that point number 5 is over. As of now, point number 5 from this list is over. We will be covering in detail in the chapter of income from other sources. Now, for remaining point, so point number 4 is also over. Point number 4 is also over. What it says? Any payment from unrecognized provident fund or such other fund. Other fund means any other fund which is unrecognized, unregistered. It is taxable to the extent to which it is consisting of contribution made by employer and interest on such contribution. Do you remember? I have discussed with you provident fund. In that provident fund, we discussed the statutory provident fund, recognized provident fund, unrecognized provident fund, public provident fund, and approved superannuation fund. While discussing that unrecognized provident fund, and while discussing that 4th component, amount withdrawn from unrecognized provident fund at the time of retirement, that amount is required to be broken down into 4 parts. Part 1 employee contribution, part 2 employer contribution, part 3 interest on employee contribution, and part 4 interest on employer contribution. Employee contribution is not taxable. Employer's contribution and interest on employer's contribution is taxable under income from salaries. So where it is taxable, which section says that it is taxable? Section 17 subsection 3 says it is taxable. Section 17 subsection 3 says it is taxable. There also, if you refer to the that provident fund table in your book, you have the provident fund table. I'll tell you the page number 45. Page number 45, unrecognized provident fund column. You see at lump sum amount withdrawn at the time of retirement. There I have given you the reference to section 17 subsection 3. There I have given you the reference to section 17 subsection 3. Yes. So point number 4 is also over, already over. I have just helped you to recollect. So now we are left with point number 1, 2 and 6. 1, 2 and 6. Point number 1 says what? Listen to me very carefully. If you read this point now, then you will feel that this point you have studied earlier. If you read this point, you will feel that this point you have studied somewhere. So you have to recollect where I did explain you similar point. What it says, any compensation due to or received by an SC from his employer or former employer in connection with termination of employment. This is point 1. Talking about termination of employment. Point 2, any amount due to or any amount of compensation due to or received by an SC from his employer or former employer in connection with modification of terms and conditions of employment. Modification of terms and conditions of employment. If you recollect, we have discussed a similar point in the chapter of PGVP in section 28. That agency contract, management contract, I gave you example of that Queen-Fisher Airlines. So that was also a contract, this is also a contract, that was a business contract, this is a employment contract. So if your employer is terminating your employment, if your employer is terminating your employment, at the time of termination, if he has given you some compensation, that compensation will become taxable to you in section 17 subsection 3. Another possibility is your employer is not terminating your employment. Employer is changing the terms and conditions of employment. Employer is changing the terms and conditions of employment. For example, you are an employee working with BPO sector, and your official job timings which are written in your appointment letter is from 2 p.m. to 10 p.m. 2 p.m. to 10 p.m. You have joined the employment. Your official timing is communicated to you in your appointment letter as 2 p.m. to 10 p.m. Now say for example night shift, 10 p.m. to 6 a.m. is the night shift. Now your company has shifted you from 2 p.m. to 10 p.m. shift to 10 p.m. to 6 a.m. shift. So you are being shifted from day duty to night duty and you are not ready to accept this. You have resigned saying that I don't want to work in the night. I'll be working only in this shift of 2 to 10. I don't want to work in the shift of 10 to 6. So your company has convinced you by paying you a compensation of 3 lakh rupees. That is what? Compensation for modification in the terms and conditions of employment. Company has compensated you once and they have said you that now we can change your timing, whatever timing is convenient to us. According to that, based on the requirement, we will change your timings. So this is the compensation received for modification in the terms and conditions of employment. Have you understood point number 1 and 2 clearly? Dikshit, let me complete this 17.3. This will get over. This chapter will get over. Point number 1 and 2 is very clear. Yes, every one of you. So now let's move on to the last point. Let's move on to the last point. That is point number 6. Point number 6. Any amount received either in lump sum or otherwise prior to joining in employment or after cessation of employment. Any amount received either in lump sum or otherwise prior to joining in employment or after cessation of employment. I'll give you a practical example. You might be aware that just around 3 years back, Infosys was looking after Infosys had appointed a CTO, Chief Technology Officer. I have forgotten his name actually. He was working with IBM in US. Infosys, he was a person of Indian origin, but he was working in US with IBM. And from there, Infosys picked him up. He stayed with Infosys for 2 years, and somehow Mr. Narayan Murthy and other promoters of the company, they were not comfortable with his working style. So they decided to remove him. And Infosys was in search of a CEO who can take over the control from him. So it was very difficult for Infosys to find out an appropriate person. Ultimately, Infosys found out one person who had worked with Infosys for 10-15 years, and then he had left Infosys and he had joined some other company. From there, Infosys took that person back. I think his name is Salil. Right now, he is the CEO of Infosys. So, whenever you have some vacancies at a very high position, you may not get the appropriate person. In that case, big corporates may offer one-time compensation to those people which they feel they are appropriate and they are suitable for the job. So, if you are an expert in a particular field, then to take you inside the company, employer may offer you one-time compensation before joining the employment, so that you join the employment. So that one-time compensation is called as compensation received prior to employment. Dixit, not Nandan Nilekani, Nandan Nilekani had taken over the control of Infosys only for a temporary period. But he is not looking after the day-to-day operations. Name is Salil Parekh. Now I recollect. Name of that person is Salil Parekh. Yes. Let's move on to last point. What it says? Any amount received in lump sum or otherwise prior to employment. So, Infosys had offered compensation to Salil Parekh so that he leaves the other company and joins Infosys. So that compensation is received prior to joining an employment. Similarly, one CFO had resigned from the Infosys. After his resignation, Infosys had given him compensation. That is called as amount received from your employer or former employer after cessation of employment. That is also taxable to you. It is a capital receipt. It is taxable in section 17, subsection 3. Yes, is that very, very clear? Point number 6. With this, the chapter of income from salary is entirely over. Yes. So, we are in the chapter of income from capital gains. This is also one of the most important chapter. Examiner can create a independent question on this capital gain chapter. PGBP chapter, IFOS, all this chapter can be combined. But when it comes to capital gain, examiner can create an independent question on this, because this chapter is containing a lot of concepts, lot of sections. Variety of concepts are covered here. This chapter will be having highest variety of questions. So this is income from capital gain, starting from section 45, ending at section 55A. Income from capital gain, as the name suggests, only capital receipts are taxable under this head. Revenue receipts are not taxable. See, salary chapter, capital receipts, revenue receipts, both were taxable. 17.3, it spoke about capital receipts. PGBP chapter, capital receipt, revenue receipt, both were taxable. But here in the chapter of income from capital gain, only and only capital receipts are taxable. Only and only capital receipts are taxable. So in this chapter, you will not find or you will not come across even a single revenue receipt. Everything is a capital receipt. Now friends, in this range of section, you always know that in the range of section, the first section is always a charging section. So here also charging section is the first section, that is section 45. Now the unique feature of this chapter is having multiple charging sections. So we have section 45 subsection 1 as the basic charging section. Then we have section 45 subsection 1a, we have section 45 2, 45 3, 45 4, 45 5, 45 5a, 45 6. We have section 46 subsection 1, section 46 subsection 2. Then we have section 50b. All these are charging sections. So in this chapter we have multiple charging section. This is the unique feature of this chapter as compared to all other other four heads of income. So we want the first charging section, that is general charging section, which would cover most of the situation, and that is section 45 subsection 1. Section 45 subsection 1 we are moving on to. Section 45 subsection 1 we can simplify into 4 conditions. We can say that if 4 conditions are fulfilled now, then your income can be taxed under the head income from capital gain. If 4 conditions are satisfied, then your income can be taxed under the head income from capital gains. Number 1 condition is there must be a capital asset. There must be a capital asset. See, if you recollect the chapter of income from house property also, we had similar conditions. Number 1, there must be property. Number 2, SSE must be owner of the property. Similar to that, here the first condition is there must be a capital asset. There must be a capital asset. Number 2 condition, there must be a transfer of capital. See, keep in mind, what is taxable under this head is whenever you sell any asset, and if there is a profit on sale of asset, that will become taxable under that capital gain. So you are having a capital asset here. Instead of word asset, we are using the word capital asset. What is capital asset? That will understand in some minutes time. So first condition says there must be capital asset, and this word capital asset is defined. We have a definition of term capital asset in section 2 clause 14. So first condition says there must be capital asset. Second condition says there must be transfer of capital asset. For the time being, you can understand transfer as sale. So you are having a capital asset and you have sold the capital asset, but this word of transfer is defined in section 2 clause 47. Is defined in section 2 clause 47. So first of all, there must be a capital asset. Number 2, there must be a transfer of capital asset. There must be a sale of capital asset. Number 3, such transfer should take place during the previous year. Such transfer should take place during the previous year. What is your previous year? Your previous year is previous year 2021. So we are talking about a situation wherever the transfer or the sale of an asset has happened during the previous year 2021. And the fourth condition is your capital gain should not be exempt from tax. Where now we have lot of sections relating to exemption also in the chapter of capital gain. These sections are section 54, 54b, 54d, 54ec, 54ee, 54f, g, ga, gb. These are sections in the chapter of capital gain which are related to exemption. These sections are related to exemption. So in condition number 4, we are saying that your capital gain should not be exempt. It should not be exempt. Your capital gain should not be exempt from tax. It should not be exempt from tax. Only if it is not exempt, it can be taxable. Only if it is not exempt, it can be taxable. So, I can summarize this section 45 subsection 1 by making very small equation by saying that taxability under that capital gain is nothing but capital asset plus transfer during previous year plus no exemption. No exemption. So if these 4 conditions are cumulatively fulfilled, that is, there must be a capital asset, there should be a transfer of capital asset, such transfer should take place during the previous year, and Such capital gain should not be exempt. If all these four conditions are cumulatively fulfilled, then we can say that your income is taxable under that capital gain. Now see, all these things are given here. Section 2, clause 14, definition of capital asset. These things are given here in around 2 pages. Whatever is given here on page number 169 as well as page number 170 is summarized here in the form of a very small flow chart. Is summarized here in the form of a flow chart. So we'll try to understand the things only from this flow chart. See, there must be capital asset. First condition, there must be a capital asset. Definition of capital asset is given in section 2, clause 14. So we are trying to understand the definition of capital asset. See, I'll tell you one statement. Every fixed asset is an asset. Every fixed asset is an asset, but every asset is not a fixed asset. Every fixed asset is definitely asset, but every asset is not a fixed asset. Every male person is a human being, definitely. But every human being is not male, na? There are females also in this world. Similarly, every fixed asset is definitely an asset, but every asset is not a fixed asset. Similar to that, I can say that every capital asset is definitely an asset, but every asset is not a capital asset. Therefore, we are dividing these assets into 2 parts. Those assets which are capital assets and those assets which are not capital assets. See, here in the chapter of capital gain, we are not using the word fixed asset, we are using the word capital asset. So there are 2 possibilities. Possibility number 1, that asset which you have transferred, which you have sold is a capital asset. Second possibility, the asset which you have transferred, which you have sold is not a capital asset. Is not a capital asset. What is the consequence? Look at this. If the asset is a capital asset, if the asset is a capital asset, and if you are having some gain by selling that asset, that gain will become taxable. On the other hand, if you are having a loss, then loss can be claimed as set off. You can claim set off for that loss. On the other hand, if that asset is not a capital asset, if that asset is not a capital asset, if you have got some gain on the sale of such asset which is not a capital asset, then that gain is not taxable. And if you have incurred a loss on sale of that asset which is not a capital asset, then that loss you cannot claim it as set off. That loss you cannot claim it as set off. Have you understood this? So if the asset is a capital asset, gain will become taxable, loss can be claimed as set off. But if the asset is not a capital asset, gain is not taxable and the loss cannot be claimed as set off. So now we need to understand which asset is a capital asset and which asset is not a capital asset. Definition of capital asset is given in section 2, clause 14, which says that capital asset excludes the following. Capital asset excludes following. So what is capital asset is not defined, but what is not a capital asset is defined. So the definition of capital asset is not given in an inclusive manner, it is given in an exclusive manner. It is given in an exclusive manner. Means those things which are not capital assets, they are given. And anything which is not covered by exclusion is automatically covered by inclusion. So how government is defined now? For example, if government makes a statement saying that everyone who is not female is male. Everyone who is not female is a male. This is an exclusive definition. Male means any person except the females. This is the manner in which the definition of capital asset is given. Everything is capital asset except the following. Everything is capital asset except following. So what are the exceptions? What are the exceptions? That is what we need to understand. So we want the right hand side of the flow chart. Here point number A, first point says stock in trade is not a capital asset. First point says what? Stock in trade is not a capital asset. Why stock in trade is not a capital asset? Why stock in trade is not considered as capital asset? Because if you sell the stock in trade, the profit which is realized on sale of stock in trade is taxable to you under that PGBP now. If once again we consider the stock in trade also as capital asset, then profit on transfer of stock in trade will also become taxable under that capital gain. That would amount to double taxation. That would amount to double taxation. Therefore, we say that we are excluding stock in trade from the definition of capital asset. So, if you sell the stock in trade, if any profit is realized, that profit will not be taxable under that capital gain. It will be taxable under that profits and gains of business or profession. Next is personal effect. For explaining you this personal effect in detail, I have made note 1. What do you mean by personal effect? Personal effect means any asset which is used by SSE. Personal effect means any asset which is used by SSE for its personal purpose. Any asset which is used by SSE for its personal purpose is called as personal effect. Government says immobile personal effects are capital asset. See, government has intelligently made the definition. By applying a lot of mind, government has made the definition. Personal effects, now, those personal effects on sale of which you will always have profits. Those personal effects are considered as capital assets. And those personal effects on the sale of which you will always have loss, now. Government says, no, this personal effect is not a capital asset. So, government has intelligently made the definition. So, for example, Ronak is wearing a shirt. Can you have a profit by selling shirt of Ronak? Can you get profit if you sell Ronak's shirt? No. So, government says, no, this is not a capital asset. Why not? Because on this, if you sell, there will be a loss. If it is a loss, you will claim set off. So government doesn't have the intention to give you set off. So government says, if you sell the shirt now, we will not levy tax on gain and also will not give you set off. But say for example, Ronak is wearing a gold bracelet. Ronak is wearing a gold bracelet. On sale of that gold bracelet, you will always have profit. So government says, yes, that gold bracelet is a capital asset. So if you have profit now, that will become taxable. And if you have loss, we will give you set off. But more than 19% chances on that sale of gold bracelet, you will always have profits. So wherever in case of personal effect now, there is a more probability of making a profit, government says, yes, this is the capital asset. And wherever there is a more probability of making a loss now, government says this is not a capital asset. Because government doesn't want to give you set off for that loss. That is the reason I told you, government has made the definition of capital asset very intelligently. So in this personal asset, we are saying that immobile personal effects, they are considered as capital asset. So if you are having a gain, that gain will be taxable. On the other hand, if you are having a loss, that loss can be claimed as set off. On the right hand side, we are having movable personal effects. These movable personal effects are divided into two categories. C1, C2. C1, government is giving you the list, and this is the exhaustive list. Exhaustive list means only those things which are specifically written here are covered. You cannot put one more point here, it is an exhaustive list. Specified movable asset. Government says we have specified the list. All these assets are considered as capital asset. In other words, if you sell any of these assets now, you will always have profit. So government is having an intention to get the tax. So government says yes, these are capitalist. If at all you have the laws, definitely set off will also be allowed. So number one, jewelry is a capital asset. Jewelry is a capital asset. By sale of jewelry, you will always have profit. So government says jewelry is a capital asset. Number two, first of all, forget about number two. Jewelry. Jewelry means what? What do you mean by jewelry? Jewelry means ornaments made of gold, silver, platinum, any other precious or semi-precious metal, whether that precious, semi-precious metal is fitted with precious or semi-precious stones like diamond or not. That will be considered as jewelry. That will be considered as jewelry. So jewelry is defined. I will explain you one more. I will give few more examples of jewelry to you after some time. But for the time being, you understand it as ornaments made of gold, silver, platinum or any other semi-precious or precious metal, whether it is fitted with precious, semi-precious stones or not, it will be considered as jewelry. Next is archaeological collection. Do you understand archaeological collection? Archaeological collection means old things, very old things. For example, sword of Tipu Sultan. Sword of Tipu Sultan. Dixit has bought sword of Tipu Sultan at 10 lakh rupees in auction. In his house, in the hall, he has kept that Tipu Sultan sword as a showpiece. After keeping in his house for 2-3 years, now he has sold this Tipu Sultan sword and it is sold at 15 lakh rupees. So all these are called as archaeological collections. This archaeological collection, they have a lot of value. Their value will always appreciate. Therefore, government says yes, this archaeological collection are considered as capital asset. Number 3, drawings. Number 4, paintings. Drawings, paintings are also considered as capital asset. For example, painting means painting done by any painter. Say for example, N.F. Hussain died. So, one day prior to his death, he was making a painting. He had completed only half and next day he died. So, that was the last painting of his life. It will be sold in crores of rupees. That is considered as capital asset. Because on sale of painting, you will always have profits. You will not have loss. Drawings. Drawings means, say for example, if you want to develop a car, before actually developing a model of the car, you will decide the shape of the car, na? So you will draw something. Besides, inside the car also, which part will be placed where, that also first a drawing will be made. And then that drawing will be implemented to make the real car. So those drawings are also considered as capital asset, because if you sell the drawing, you will get a money and the amount will always appreciate. So drawing, painting, both are capital asset. Next is sculpture. Sculpture. Do you understand sculpture? Yes? Do you understand sculpture? In London, in UK, in London, you have one museum named as Madame Tussauds Museum. In that Madame Tussauds Museum, you have the statue of Kareena Kapoor, you have the statue of Amitabh Bachchan. All these statues are considered as sculpture. They are wax. Madame Tussauds is a wax museum. Those statues are made of wax. So those statues will be considered as sculpture. It will always appreciate in value. Next is work of art. Work of art means anything which is unique in this world. Anything which is unique will have more value. Anything which is unique will have more value. So that is termed as work of art. For example, you might have seen vintage cars, vintage cars. The very old cars, the 150 years old car. Those are called as vintage cars today. Those cars are sold at 25 lakhs, 40 lakhs, 50 lakhs. In those olden days also, when the cars, that car was manufactured, in that period also it might not have that much value. Now it is having a lot of value because you have very less number of such cars in the entire world. So as of now, it has become a unique piece of car. So that is considered as work of art. And all that work of art is a capital asset. Because government believes if you sell any of these things, you will always have profit. So government says jewelry, archaeological collection, drawing, painting, sculpture, work of art. All these things are considered as capital asset. So if you are having gain, if you are having gain on sale, that gain is taxable. And if you are having loss, that loss can be claimed as set off. That loss can be claimed as set off. Now we move on to the category 2, last one, that is other movable assets. These other movable assets, now they are not considered as capital asset because on sale of these other movable assets, you will always have loss. You will always have loss. So you will claim set off, and government is not having any intention of giving you set off. Therefore, government says this is not a capital asset. This is not a capital asset. So if you have gain on its sale, now it is not taxable. And if you are having loss now, then that loss cannot be set off also. That loss cannot be set off. I will give you examples. For example, Sarvana, wait for some time. We have just started here. You have just started. Everything is covered. Don't worry. I will take a lot of examples to make you understand. Nothing will be left. You wait for some time. Let me go with the flow of the chapter. I was to give you examples. Listen to me very carefully. See, the clothes which Sarvana is wearing, if you sell his clothes, will you have profit? No, na. So government says clothes are covered by other movable assets. Sarvana is wearing belt. If you sell his belt, will you have profit? No. So clothes of Sarvana, belt of Sarvana, specs, watch, his shoes, his bicycle, his motorcycle, his car. When Sarvana reaches home, in his home also he is having a lot of movable assets like television, refrigerator, washing machine, sofa set, almari, bed, household utensils, geyser, oven. All these are personal effects. All these are movable. If you sell any of this, you will always have loss. Therefore, government says these are not considered as capital asset. If you have gain, we will not levy tax. If you have loss, no set off. But most probably, you will always have loss. Therefore, government doesn't have the intention to give you set off. Therefore, government says this is not a capital asset. Now, let me tell you, say for example, I'll ask you a very simple question. Sarvana is wearing a shirt. His shirt. Do you believe it is a capital asset? Yes. Dikshit will come to that point. Wait for some time. Dikshit will come to that point. Don't worry about that. I will come to that point. Give me some time. Just answer me whatever I am asking you. Everything will be covered. I know. This doubt will come in the mind of generally a lot of students. Wait for some time. First of all, tell me, Sarvana is wearing shirt. Is it a capital asset? No, it is not. Because by selling his shirt, you will always have loss. But what if I tell you that the shirt which Sarvana is wearing, his buttons are made of gold. In that shirt, buttons are made of gold. In that buttons, every button, he has fitted a diamond. So all the buttons in his shirt are made of gold, and in that each button there is a diamond worth lakhs of rupees. Now if you sell this shirt, then what? Will you have profit or will you have the loss? Definitely you will have profit. Because this shirt is not an ordinary shirt. Now it has become an ornament for him. Now it has become a jewelry. So don't consider jewelry to be a very restrictive in scope. The word jewelry is very wide in scope. Jewelry can include a shirt having buttons of gold, silver, etc., fitted with diamond, etc. So the shirt which Sarvana is wearing is, in that shirt button is of gold, diamonds are fitted. That shirt will be considered as jewelry. The belt which Sarvana is wearing now, in that belt the buckle is made of gold. That will be considered as jewelry. The watch which is wearing, entire watch is made of gold. 24 karat watch. Cost is 60 lakh rupees. That watch will be considered as jewelry. Are you understanding? In Sarvana's house, in Sarvana's house, if you get inside his bedroom, he is having a almari, wardrobe. In that handle, almari handle you pull, for opening the almari. That handle is made of silver. That almari handle is made of silver. So that will be also taken to be a capital asset. So all these things which generally you don't consider to be capital asset, but in these things, if you fit some precious or semi-precious metal like gold, silver, platinum, or you fit that with some precious or semi-precious stones like diamond, then all those things will become capital asset. All those things will become capital asset. Now, Dikshit had asked me one question saying that, sir, now before I get to the doubt of Dikshit, Rizwan is asking me, sir, what is an example of immovable personal effect? Example of immovable personal effect is only one. The house in which you are staying, your residential house, is a personal effect, and it is a immovable personal effect. So it is nothing but land building. Land building is the only thing in this world which is immobile. So your house is a land and building used for personal purpose. It is a personal effect. Next, listen to me very carefully. Dikshit has asked me doubt, sir, shirt which is worn by Rajinikanth, celebrity. If Rajinikanth purchases a shirt of only say 500 rupees, and if he wears that shirt for 2 days, and on the third day, if he is selling that shirt by auction, in south part of the country, southern part of the country, that shirt will be sold for crores of rupees. So is that shirt a capital asset or is it a personal effect? Should we consider this as capital asset or should we consider this to be a personal asset? Have you understood his question? So shirt, trouser, belt, which is an ordinary shirt, ordinary trouser, ordinary belt, ordinary specs, ordinary watch, but those are worn by celebrity. If you sell that watch, personal belongings, you can get huge amount of money, but still those things will be considered as personal effect only. So they are not considered as capital asset. So if Rajinikanth is getting huge amount of money by selling his shirt, no tax. See, he can get huge money by selling his shirt only if he sells once in a while. If he purchases 1,000 shirts, like he wears for 5 minutes and he sells, no one will buy for even 10,000 rupees. Only because he is doing such activity once in a while, it is having a value. But if Rajinikanth purchases 5,000 shirts, he puts a shirt and for 5 minutes and he is putting his signature on a shirt, that shirt cannot be sold for lakhs of rupees. Then it will become ordinary. Then it will be considered as a stock in trade. Now he is into business of selling the shirts. In that case, his income will be taxable under that PGBP. Anyway, stock in trade is excluded from the definition of capital asset. So, all these personal effects of celebrities also, they are considered as personal effects only. So if you have profit, they are not, those profits are not taxable, and if you have loss, you cannot claim set off for the loss. Have you understood this? So we have completed point number B, personal effects. Point number C, agricultural land. Point number C, agricultural land. For that we are having note number 2. So let's move on to this note number 2. Agricultural land is a land on which you are doing agricultural activities, primary activities, subsequent secondary activities, etc. If you are having agricultural land outside India, say for example, Dikshit is owning 10 acres of agricultural land in USA, then what is your belief? Is he a poor person or a very rich person? He is having 10 acres of agricultural land in USA. Definitely he is very rich. So government says, if you are owning agricultural land outside India, then that is considered as a capital asset. Then that is considered as a capital asset. If you are having gain, that will become taxable. If at all you are having loss, you can claim set off. Correct? On the other hand, if you are having agricultural land in India, if you are having agricultural land in India, if you are having agricultural land in India in urban area, then definitely it is a capital asset. If you are having gain on the sale of this land, it is taxable. If you are having loss, that loss can be claimed as set off. That loss can be claimed as set off. See, for example, Dikshit is having 10 acres of agricultural land in the city of Chennai. In that case, he is a very rich person. So government says this land situated in India, in urban area, will be considered as a capital asset. But what if some poor farmer is having some land in rural area? Then government says no, it is not considered as a capital asset. We will not consider this as capital asset. So a very poor farmer selling some part of this land in some rural part of the country, then that agricultural land will not be considered as a capital asset. In other words, if you are having a gain, that is not taxable. If you are having a loss, that loss cannot be claimed as set off. That loss cannot be claimed as set off. See, believe me, in India, the farmers are having huge attachment with their land. They love their land as if that land is a godfather for them. Whatever respect they are having for their own parents, same respect they are having for land. So, before they start the agricultural activities, they do puja also. So, no farmer would sell his land. If at all a farmer is selling the land, then definitely you can say that he is in dire need of money. Therefore, government says a farmer situated in a rural area, we can't imagine that he will sell his land. Therefore, if at all he is selling the land, he is in dire need of money. So we say that it is not a capital asset, gain will not be taxable. Any land you sell now, you will never have loss. You will never have loss. Because land value is always appreciable. But government says, here we don't have the intention of levying the tax because farmer in rural area is very poor. He doesn't have the intention to sell the land and earn the profit. If he is in dire need of money, he will sell the land. In that case, we say that this gain will not become taxable. So intentionally, agricultural land situated in rural area is excluded from the definition of capital asset. Is excluded from the definition of capital asset. Now one question may come to your mind. Sir, what do you mean by urban area? What do you mean by rural area? What do you mean by urban area and what do you mean by rural area? See, the words urban area and rural area, they are not used in ordinary language. They are not used in the manner in which a layman is using the word urban area and rural area. If you recollect, there was one similar kind of table in the agriculture income chapter also. In agricultural income chapter, section 2 clause 1a subclause B, section 2 clause 1a subclause C, income from farm building. Income from farm building was considered as agriculture income provided 4 conditions are fulfilled. Number 1 condition, that farm building is occupied by cultivator, grower, producer. Do you recollect those 4 conditions? Generally, income from building is considered as income from house property, but income from farm building would be considered as agriculture income. It will be exempt from tax provided 4 conditions are fulfilled. Condition number 1, that farm building is used by cultivator, grower or producer. Condition number 2, that farm building is adjacent to the agricultural land which is in India and used for agriculture purpose. It is near to the agricultural land. Condition 3, that farm building is assessed to the local taxes or to the land revenue, and that farm building is required to be used as a storehouse, dwelling house or other outhouse building. If these 4 conditions are fulfilled, then income from farm building will be considered as agriculture income and it will be exempt from tax. 4th condition, that farm building should be assessed to land revenue or local tax. In point 4, we had 2 conditions, part A, part B. That part A I had explained you, and part B I told you that we will understand this when we move on to the chapter of income from capital gain. So this table, same table is also there in section 2 clause 1a subclause C. Out of 4 conditions, in 4th condition, part 2, you are having this table. So intentionally I have not explained there because I don't want to waste my efforts. So I will be explaining you here. Now listen to me carefully. Our objective is to understand what is rural area and what is urban area. Because agricultural land situated in rural area is not considered as capital asset. So if there is a gain on sale of agricultural land situated in rural area, that gain is not taxable. If you are having a loss, that loss you cannot claim as set off. On the other hand, if the agricultural land is situated in India, in urban area, yes, it is a capital asset. Gain on its sale will become taxable, and if you have the loss, government will give you set off. So it is very important for us to understand what is the difference between urban area and rural area. So I am telling you that government has defined what is urban area. Government has defined what is urban area, and then government says whatever is not urban, by default it will be considered as rural. Whatever is not urban, by default it will be considered as rural. Now listen to me very carefully. I am taking different examples to make you understand what is a urban area. This is my example number 1. This is example number 1. This circle is the jurisdiction of a municipal corporation. Do you understand jurisdiction? Yes? Do you understand the word jurisdiction? Jurisdiction means the area on which a particular municipal corporation will exercise the control. Jurisdiction means the area on which particular municipal corporation will exercise a control. Like Chennai Municipal Corporation will not exercise control over the Coimbatore area. Even though Coimbatore is within the state of Tamil Nadu, Chennai Municipal Corporation will not have control over the Coimbatore locality. Coimbatore, we have a separate municipal corporation, a Coimbatore Municipal Corporation. So every municipal corporation, every local authority will have a control over a particular area. So there are geographical boundaries. Within those boundaries, the area belongs to that particular municipal corporation. So we use the word jurisdiction of a municipal corporation. Now let me explain you that this circle is the jurisdiction of Chennai Municipal Corporation. For example, this circle is a jurisdiction of Chennai Municipal Corporation. So entire area within this circle is within the jurisdiction of any municipal corporation, maybe Chennai Municipal Corporation or some other municipal corporation. This circle is a jurisdiction area over which a municipal corporation is exercising a control. If there is a municipal corporation in this area, in any area, if there is a municipal corporation and the population of the jurisdiction of that municipal corporation, the population, not of the entire country, not of the entire city, the area over which a particular municipal corporation is having a jurisdiction, for that area you see the population. If the population of the jurisdiction of a particular municipal corporation is less than 10,000, then it is considered as rural area. See, we can divide a locality in two parts. Some localities do not have the municipal corporation. Some localities do not have the municipal corporation. They do not have municipal corporation. See, if they do not have municipal corporation, they will have Gram Panchayat, na? Do you understand Gram Panchayat? Yes? Have you heard the word? Somewhere in your school days, in some of the subjects you might have learned, na? Everywhere you don't have municipal corporations. In small villages you have Gram Panchayat. So if you don't have municipal corporation, na, that area will be considered as rural area. That area will be considered as rural area. So number one example, if in that particular locality there is no municipal corporation, that locality will be considered as a rural area. Number two example, in that locality there is a municipal corporation, but the population of that jurisdiction of the municipal corporation is less than 10,000, then that area will be considered as rural area. That area will be considered as rural area. Third example. This is third example. Listen to me carefully. If the population of the jurisdiction of municipal corporation is less than 10,000, then what? It is considered as rural area. If the population of the jurisdiction of municipal corporation is greater than or equal to 10,000, then it is considered as urban area. Is that very clear? Example number 1, 2 and 3. Yes? Yes or no? Okay. Now I move on to example number 4. This would require a lot of application of mind, so you need to focus. This circle, you have a municipal corporation. This circle is a jurisdiction of municipal corporation. Population of this jurisdiction is more than 10,000. But it is less than or equal to 1 lakh. Population of the jurisdiction of a municipal corporation is more than 10,000 but less than or equal to 1 lakh. In that case, that circle, if you are having agricultural land within the jurisdiction of that municipal corporation, within that circle, then that will be considered as a urban agricultural land. Now, say for example, look at this circle. Here, circle is ending here, So this is the end of the jurisdiction of municipal corporation. Outside this circle, this municipal corporation is not having any control outside the area of the circle. Within the area of the circle, municipal corporation is having a control. Population of that circle is more than 10,000, but is less than equal to 1 lakh. So that area within the circle is called as urban area. Outside the circle, anything which is within the range of 2 kilometers. Outside that circle, anything which is in the range of 2 kilometers radius will also be considered as urban. See, if particular locality develops now, then the outer part of the locality will also develop. Therefore, government says, if this circle is urban, then just outside the circle also, within the range of 2 kilometers, every area will get developed now. So that 2 kilometers range, every area we are considering it to be urban area. Have you understood this? So within the circle, everything is urban. Outside the circle, anything which is in the range of 2 kilometers will be considered as urban area if the population within the circle is more than 10,000 but is less than equal to 1 lakh. This is fourth example. I move on to now example number 5. This circle is within the jurisdiction of municipal corporation. There is a municipal corporation here, and the population of this jurisdiction is more than 1 lakh, but it is less than equal to 10 lakh. Population is more than 1 lakh, but less than equal to 10 lakh. In that case, anything which is within the circle is an urban area, and anything which is outside the circle but within the range of 6 kilometer radius will also be considered as urban area. See, higher the population, that area will be developed more. Mumbai is densely populated, so it is more developed because there are a lot of economic activities taking place there. So within the circle it is always urban. Higher the population of the circle, the area outside the circle, more area outside the circle will be considered as urban. So in fourth example, only 2 kilometers outside the circle was considered as urban. In fifth example, 6 kilometers outside the circle is considered as urban, because in fifth example, within the circle population is more. Last example, example number 6. Within the circle there is a municipal corporation, and the population of the jurisdiction of that municipal corporation is more than 10 lakhs. In that case, anything which is within the circle is considered as urban. Anything which is outside the circle within the range of 8 kilometers, also, then also it will be considered as urban. Have you understood till now? Yes or no? Now let me give you one complicated situation. Listen to me carefully. Say for example, here there is one more municipal corporation. Here you have one more municipal corporation. Here this circle is one more municipal corporation. There also population is more than 10,000. So within this circle everything is urban. Population of this circle is more than 10,000 but less than equal to 1 lakh. So outside the circle, anything which is in the range of 2 kilometers is urban. So this is municipal corporation 1. This is municipal corporation 2. See, both municipal corporation, they will not run into each other's area. Their jurisdiction is defined. But say for example, if you are having agricultural land here, then it is outside the jurisdiction of municipal corporation 1 also and municipal corporation 2 also. So we are talking about that agricultural land which is the outside the jurisdiction of municipal corporation of both the municipal corporation. In that case, if this land is within the range of 2 kilometers, if it is within the range of 2 kilometers from this circle, or within the range of 8 kilometers of this circle, within the range of 8 kilometers, then also this agricultural land will be considered as urban agricultural land. Have you understood this? Either it should be within the radius of 2 kilometers or 8 kilometers depending upon the population inside the circle. Now, I am moving on to slightly complicated point. You have to focus more here. Let me ask you a question. Listen to the question very carefully and then answer the question. Say for example, here you are having agricultural land. This is a plot of land. This is the jurisdiction. This circle is the jurisdiction of municipal corporation. This agricultural land is situated outside the jurisdiction of municipal corporation. Population of this jurisdiction is more than 10,000, less than equal to 1 lakh. So outside the circle, everything which is within the range of 2 kilometers is considered as urban. Now my point is, say for example, if you want to reach to this agricultural land, if you start from here, this is the route. By road you have to go na. This is the route. This is the route, walking route. If you want to go walking to this agricultural land, this is the route. If you go walking, then it is outside the range of 2 kilometers. If you go walking now, then it is outside the range of 2 kilometers. But there is something called as aerial measurement. Aerial measurement means it is also called as bird flying distance. The bird will not fly in this manner. Na? Bird will directly fly from this place to this place in this manner without taking any turns. So, if you take this bird flying distance now, if you take this bird flying distance, then 2 kilometers is up to this point. 2 kilometers is up to this point. Are you understanding? Yes or no? Now my question is, this 2 kilometers should be taken as walking distance or should it be considered as a crow flying distance? If you say that 2 kilometers should be considered as crow flying distance, then that agricultural land is within the range of 2 kilometers, it will be considered as urban. But if you say that 2 kilometers range should be taken as walking distance, that is outside the range of 2 kilometers, that agricultural land should be considered as rural agricultural land. In one of the case, this was the controversy. That case had reached till High Court level, and court had given the decision in favor of taxpayer. Income tax department was of the opinion that we should take the crow flying distance, and SSC was of the opinion that I am not a bird, so I can't fly, so I can only walk. So you have to take the distance which I measure by walking, na? So it is a walking distance, not a crow flying distance. That is what SSC had an opinion. And court gave the decision in favor of SSC. Court gave the decision in favor of SSC, but government did not like this decision. And since government did not like this decision, government came out with an amendment. Government came out with an amendment that you have to take crow flying distance. So what is the correct answer? Now as per the amended provision, You have to take crow flying distance. Have you understood? Yes. So conclusion is what? Flying distance you have to take, crow flying distance, not the walking distance. So in this example, we have understood what? What is urban area, what is rural area? What is urban area, what is rural area? So with this, point number A, point number B, point number C is over. Agricultural land outside India or agricultural land in India in urban area is considered as a capital asset. Agricultural land in India in rural area is not considered as a capital asset. Now let's move on to point D. Last exclusion from the definition of capital asset is gold deposit bond, gold bond or special bearer bond. I think you might have heard this word earlier, gold deposit bond, gold bond, somewhere in economics. Yes, do you know what is gold deposit bond? Yes or no? No. Some of you are knowing, some of you are not knowing. I will explain you. Listen to me very carefully. See, Indians love gold. So the moment they have some amount of money and the moment they have opportunity, they will go and buy the gold. Akshaya Tritiya also we buy the gold. By tradition also, it is taught to us to buy gold. Housewives, they will save 500 rupees, 1000 rupees. And the moment they accumulate 10, 15, 20,000, they will buy gold, 1 gram of gold, 2 gram of gold. So in India, everyone has a tendency to buy gold. They will buy the gold, they will keep it in the locker. So in India, there is huge demand for the gold, but in India, we don't have any gold mine. So to fulfill this gold demand, we have to import the gold from outside India. And if government goes on importing the gold from outside India, government has to shell out the foreign currency. So foreign exchange reserves are depleting because of huge import of gold. And if you spend your foreign exchange reserve in importing gold only, when you will buy the capital goods, when you will provide some incentive to your industries, only when you import the capital goods, industry can be set up. Industry can be set up, people will have employment opportunities, more goods can be manufactured, those goods can be exported, foreign currency can be earned. Instead of earning the foreign currency, whatever foreign currency you are having, you are spending it and your foreign currency reserves are getting exhausted. So, to fulfill the requirement, to fulfill the demand of gold, without importing the gold, government came out with an idea of gold deposit bonds. Government tells that you are owning a lot of gold in your locker, it is lying idle. That is unproductive asset. That is not generating an income for you. Do one thing. We will issue a gold bond to you, and in exchange of that gold bond, you give your gold to us. Now, for example, Dixit is having 1 kg of gold. Per 10 gram, price as on today per 10 gram is 50,000. So what is the value of 1 kg of gold? 50 lakh rupees. So government will issue gold bond to Dixit, valuing 50 lakhs. And Dixit will give his gold, 1 kg of gold to the government. Now Dixit has received gold bond. So his gold has got converted into a gold bond, valuing 50 lakhs. On that 50 lakhs, now he will start getting the interest. So the gold, which was an unproductive asset, has got converted into a gold bond, which is a productive asset. It is earning you interest. So government will give you gold bond and they will take away gold from you. On the value of that gold bond, government will also give you interest, and that interest will also be totally exempt from tax. that interest will also be totally exempt from tax. Now what government will do about that gold? Government will melt that gold. They will make gold coins or they will make gold biscuits, and then that gold will be supplied in the market so that the demand of gold gets fulfilled. Without importing the gold, demand of gold will get fulfilled. Foreign currency reserves will not be exhausted. Now what will happen at the time of redemption? Say for example, after 5 years, it is a time to redeem that gold bond. In that case, government is giving two options to Dixit. Whether you want your money, whether you want money or whether you want gold. Dixit says, no, I want 1 kg of gold. So government says, okay, we will give you gold. But government has already supplied this gold in the market. From where government will have the gold? So what government will do now? Government will issue fresh gold bonds. Government will issue fresh gold bonds. From there, government will get the gold once again. And that gold will be utilized for redeeming the gold bonds which were issued earlier. So government is just playing the game. They are taking the gold from one person, they are giving to another person. Now Dixit has received his gold at the time of redemption. When Dixit had given the gold to the government, price of the gold in the market was 50,000 rupees per 10 gram. So the value of 1 kg of gold which Dixit had given to the government was 50 lakh rupees. After 5 years, at the time of redemption of gold bond, Dixit will return this gold bond to the government and government will give 1 kg of gold to Dixit. At that point of time, value of 10 gram of gold was 80,000 rupees. So what is the value of that 1 kg of gold? 80 lakh rupees. When Dixit gave 1 kg of gold to the government, the value was 50 lakh rupees. When Dixit is getting back that 1 kg of gold from the government, the value is 80 lakh rupees. So the value has appreciated by 30 lakhs. Should we levy tax on this 30 lakhs? If you levy tax on this 30 lakhs, at a first instance, Dixit will not give you gold only. Because Dixit will say that even if this 1 kg of gold is lying in my locker, then also value will appreciate. Then also value is going to appreciate. And then in that case, that appreciation in value, that is an unrealized gain for me. That is an unrealized gain. On that unrealized gain, you are not going to levy in tax. So I am helping the government by giving my gold, and government is returning that gold to me after 5 years, and the appreciation in value you are levying tax. That is not a realized appreciation, it is unrealized. You should not levy tax, otherwise I will not invest in gold bonds. So whenever government issues the gold bond, government should get the investors to give the gold. Therefore government says gold bond is not a capital asset. Gold bond is not a capital asset. So at the time of redemption of gold bond, the appreciation in the value of gold bond will not be taxable. Will not be taxable because that gold bond is not considered as capital asset. Have you understood this very clearly? Yes or no? So here we have understood what are all exclusions from the definition of capital asset. All other assets are considered as capital assets. All other assets are considered as capital asset. But yes, in note 1 as well as note 2, the note 1, note 2 also, some assets are considered as capital asset only. See, mathematically minus is plus, mathematically minus is plus. Similarly here, personal effect is excluded from the definition of capital asset, and jewelry is excluded from the definition of personal effect. Personal effect is excluded from the definition of capital asset, and jewelry is excluded from the definition of personal effect. meaning thereby exclusion should be considered as inclusion. Exclusion should be considered as inclusion. Na? So jewelry is a capital asset. Jewelry is a capital asset. Rizwan, you wait for some time. Don't worry. I'll explain, don't worry. Have you understood right hand side now? Those things which are not capital asset. But in that also we are having certain exceptions. Except whatever is written on the right hand side, except all these things, rest all assets are considered as capital asset. So your capital asset can be a tangible asset or intangible asset. Your capital asset can be a movable asset or immovable asset. Your capital asset can be a personal asset or business asset. All assets are considered as capital asset except when they are covered by the specific exclusions. Except when they are covered by the specific exclusions. Now Rakesh is asking me the doubt. Sir, if the agricultural land a part inside 2 kilometers and another part outside. Rakesh is asking me a question. Sir, what if you are having one plot of agricultural land, part of that is inside the range of 2 kilometers and part of that is outside the range of 2 kilometers. What should we do about that? In that case, whatever part is within the range of 2 kilometers should be considered as urban, and whatever part is outside the range of 2 kilometers should be considered as rural. So that land partly within the range of 2 kilometers, partly outside the range of 2 kilometers, it will be considered as partly urban, partly rural. So you have to bifurcate what proportion is urban, what proportion is rural. The proportion which is urban should be considered as a capital asset, and the proportion which is outside the range of 2 kilometers is rural. It should not be considered as capital asset. Yes, is that very, very clear, Dikshit? Sorry, Rakesh? Rakesh, is that very clear? Did you all understand what question Rakesh had asked? Yes or no? Yes? So here I have answered his question. On the left hand side I am telling you all other assets are capital assets. All assets which are not falling in the list of exclusion, automatically they will become capital asset. Automatically they will become capital asset. Is that very, very clear? So today till now we have understood what is capital asset and what is not a capital asset. So, yes, your today's quota is over. Akshay is asking me, sir, shirt with gold button, is it a capital asset? Yes, it is. Shirt with gold buttons is a capital asset. That is considered as jewelry. That is considered as jewelry. I don't want to get into further part of the concept, but just 2-3 points related to what we have already discussed. See, some important point to be noted. Number 1, gold and silver coins. In your house, in your house also you might be having temple, small temple. In a house also, some area of your house you keep the small temple for doing puja. In that you have kept gold coins and silver coins. On silver coins you have goddess Lakshmi. You do puja of those gold coin and silver coins. Are they considered as capital assets? Yes, they are considered as capital assets. So gold coins, silver coins and bars which are used for puja of deities, kept in a puja room, they are considered as capital asset. Silver utensils, they are considered as personal effect. See, silver utensils means silver plate, silver plate. If you are having a bowl of silver, spoon of silver, those should not be considered as jewelry because it is a utensil, not a jewelry. So, if you are having silver plates, silver bowls, silver spoons, will they be considered as a capital asset? As of now, it will be considered as capital asset. But there was one case law. There was some ruler, ex-ruler of India. There was some Raja Maharaja. Do you understand the Raja Maharaja? Yes? Do you understand Raja Maharaja? Raja Maharaja means ex-rulers of this country. In the house of Raja Maharaja, they have food in the silver plates. So one Raja Maharaja, he had sold his silver plates, silver bowls, silver spoons, etc. And he was of the opinion that all these silver utensils, they are personal effects. These silver utensils are my personal effects and they are not capital asset, so gain should not be taxed. Income tax department was of the opinion that these silver utensils they should be considered as a jewelry and capital gain tax should be levied. This case reached to the court and court concluded that this Raja Maharaja, these people are using this silver plates, bowls and spoons in their daily life, day-to-day life for having food. So they are having the character of utensil. Though therefore this should be considered as personal effect and this should not be considered as capital asset. But as of now, if you are having silver utensils in your house, you are not the ruler, you are not the king. So for you, in your house, you don't have a tradition of having food in silver utensils. So for you, those silver utensils would be considered as a capital asset. For that king, for that ex-ruler, silver utensil was a utensil because in his house there was a tradition of having the food in a silver utensil. So as of now, silver utensils will be considered as a capital asset, but in the case of ex-king, ex-ruler, it was not considered as a capital asset, it was considered as a personal asset. Last point for the day. If you are having scooter, bike, car, bicycle, if these are your personal assets, then they are excluded from the definition of capital asset. But if you are having a car and that car is used in business, then that car is a depreciable asset. You might have claimed a depreciation under section 32. That car is forming part of a block, and whenever you sell any asset which is forming part of a block, either you may have a depreciation or capital gain. That we have already discussed in the chapter of PGBP. In that example number 1, I had given you 4 cases, case 1, case 2, case 3, case 4. Do you recollect that? So that is already discussed. So car which is used for business purpose is considered as a capital asset, but car which is used for personal purpose is not considered as a capital asset. Laptop which is used in business, on which you have claimed depreciation, would be forming part of block. That will be considered as capital asset. But your personal laptop will not be considered as capital asset. So this point we have completed. Today we have completed the definition of capital asset which is given in section 2 clause 14. Yes. So we'll wind up here. Bye bye.